and Twitch.
Hey,
Hello and welcome to Crypto Market Analysis Wednesday. The
yeah,
bulls in full effect, charging forward.
sure are. Been a fun week. Post-election week here. A lot of people giving Trump all this credit for the CryptoPunk, which is funny because he's not president yet. But maybe it is a lot of that. Like there is definitely a hype factor involved.
I mean, also saying for 6 to 8 months now
It's
that at the end of this
yeah,
year or beginning of next year there should be a large bull run.
massive pump.
So
Yeah, it was in the stars for a while, and then it always like it's gonna happen, and then it lines up with some news event, and then the whole news media is just like it's because of this news event. Which is like, I don't know, then how come we seen it coming? But, market's gonna market, and I'm here for it, yo. We're all here for the bulls, so easy to be excited. Also, look at all these weird NFTs I got. I claim them all and then look at this wallet. I don't hold any NFTs in here except for one. This is my liquidity pool wallet. And I'll show you the one NFT I do hold. It's very appropriate for the wallet. I'll show you. Go wallet. I wonder, is there a way I can see my NFTs on Taco? Probably not, huh? But on here, I'm sure I can here. Let's see. Wallet, NFTs. There we go. Well, okay. Alcor doesn't see a very good display of any of these.
Comic Hub.
Yeah, it looks like I'm gonna need to.
You need to even log into your
That's true. Let's look at it. It's yield farming accounts. There it is. All right. So all of these that aren't the first one are ones that I've been getting for farming. And I guess this one got airdropped, but of course the one I was talking about that I felt like was appropriate to hold in this wallet. Liquidity Pool Party, the Naked. So I hold that just because
We'll burn a bunch of those.
6 of them, yeah.
A lot of naked.
Damn. Yeah. That's good for me. That means there's only 44 left?
This will be before we made them rare because there's 50 now. Like
Yeah.
under 10 if you're burning a naked. Crazy.
Yeah, I just wanted it because I like the artwork for this one, and it's appropriate for my yield farming wallet. But I guess all this other stuff is from rewards. They all sell for like point fractions of waxes. Oh, this one's listed for 1. I don't know what any of this stuff is, but it is fun to see my wallet filling up with NFTs, even if they are kind of ugly nonsense. So at least some of them are. Like, what is this? Oh, it moves.
I think I
Wait, I
remember
swear
when
it
this
moved, right?
collection was coming out.
Oh, look, it does. It moves. It moves, but like sporadically. I don't know. This is unsettling.
It looks horrible. I
Well,
don't
there
know
we
that I
go.
could make something look that bad if I tried. I'm bad
No.
at drawing, and I think I'd.
Yeah, I just the composition, everything about this is. I don't know. It's fun. I don't plan to sell it to anyone. I wouldn't do that to you. But I do have them in my wallet now.
Some kind of look like Pokemon or Magic cards.
Yeah, like these guys. Let's see. What's this? Just because I'm looking at it doesn't mean I'm into it. I just got these for free, so heads up. For free for farming, I guess. Common Donic.
Have you been doing
Donica.
the new Pokemon game that everybody's going crazy about?
There's a new Pokemon game?
I'm surprised you're not on that train. It's like a Pokemon trading card game on mobile.
What? No, that sounds dope.
Not
I love
Web3 or
Pokemon.
anything, but
And
it's still like
I love trading card games and Pokemon.
yeah, I
That
feel like you
sounds up my
already
alley.
Pokemon Go, but I don't know. I feel like the trading card game Go.
Yeah, that's dope. No, I haven't even heard of this. So I guess I'll check it out later tonight.
I wonder if it's like
Let's see. I gotta finish my
a Pokemon
sub
TCG Pocket,
G
the number one
Pocket.
card game on the chart. You can open 2
Okay.
packs every day and get Pokemon.
Ooh, that's dope. I mean, I'm into that just to rip packs. I mean, I will say back in the early days of Pokemon actual card ripping, I got a pack of Pokemon cards and I opened a foil Charizard. That was a big deal for me. An early hook into the collectible world. I was very excited. I had it in my I had a binder. I put them all in the binder. I had them organized real well. I had the binder like stashed away in my closet, and then when I was off at college, I guess my parents had like some friends from Germany over, and one of their kids, I say kids, but he was like preteen, like found it and was like, "Can I have these?" And my mom was like, "Sure." And then later when I came back, I was like, "What the fuck happened to all my rare Pokemon cards?" She's like, "Oh, so and so like asked if he could have them, and I just said he could." And I was like, "Shit!" I had a first edition Charizard, a first edition Ninetales. I had all of the fucking like 150, the first 150 guys. Like all of it was organized. I came back to it, and this little fucker took all the valuable shit and left the not valuable stuff. Like so, I like still had the binder and stuff. It was just missing everything cool. It was a real slap to the face, but a good learning moment to be like, okay, don't store your valuable like collectibles that are not clearly valuable at your parents' house. Lesson learned. I'm sure the person who took them also didn't like care for them the way I did, and I doubt they still have them or would still. I would have still had them today,
Probably
just
traded
like I
them for,
still have
like,
my
snacks at lunch.
probably. I mean, I still have my Magic cards from like '94 or some shit that I opened in middle school. Like, but whatever. What not elementary school? I still have my elementary school Magic the Gathering stuff, which is I like it was quite valuable for a while. I think some of those cards are worth like hundreds of dollars. Like Like I have a Mox Sapphire, which is one of the Power 9 cards. And it's from the beta set too, so black border. It's a big deal. Collectors get geeky when I show it to them. But I don't know. I'm not in the business of like reselling that stuff. It literally is just like, oh, it's a sentimental value, and like I really enjoyed this as a kid, and it still sparks joy when I look at it as an adult every now and then. And the Pokemon cards would have been the same, but it sounds like this digital card game on my phone might, you know, come with the benefit of not living at my parents' house in the closet where somebody can just gift it away.
I don't know if you can sell them. I don't know. I really haven't looked in the.
That works for
I'll
me.
probably
I'm
try
not
it
trying to
out.
sell 'em.
I like Pokemon.
All right. Let's see. I'm going through here. I'm trying to get 1.5 million FTW so I can send it to my FTW wallet because if I go to farms, the Yeet pool added 150,000 Yeet rewards to my Yeet FTW farm. So I wanted to return the favor and also add, kind of the equivalent, which would be 1.5 million FTW over the next 350 days. It won't be a lot, but I'm pretty much the only one who farms this pool anyway. It says I have 155% of the reward share. So let me refresh that. It'll probably be much less than that. But either way, I wanna return the favor. I didn't talk to the team behind Yeet. I don't know who did that, but clearly whoever owns the contract address for Yeet added rewards to the Yeet FTW pool, which I made. So that's cool. And if they're gonna add rewards, I will too. Let's see. Is it gonna tell me? No, it's not updating. It still says I own 155%. So I probably am like the only person in this fucking pool. Easy way to check would be to go to pools, click on the specific pool, click on the FTW icon at the top. Okay, so I'm not the only person here, but I'm definitely the biggest. So $20 in there compared to like the next biggest is 3, then 2, then 20 cents, and then 10 cents. Still, I'm gonna return the favor. I'm gonna incentivize that, and again, I have in the FTW wallet, I keep about like half of the total supply, so 500 million. It's a billion total supply token. Half of it I wanted to drop into the liquidity pools, which I did. and then the other half was going to be determined on how I distribute that after a full year of FTW, rewards and everything the way I've set up running. So that way I'll have a better idea of how best to distribute the rest of it. So this is going to be basically that is to say I don't, even though I have 500 million tokens, I can't take 1.5 million out of that because that isn't in circulation as far as like my own imagination of what the tokenomics are. I'm not like I published it anywhere, but it's all in my head. But either way, I'm close to 1.5 million. So let me just see. I'm just trying to swap some of what I've earned this week. It looks like I need just like 65,000 more. I might be able to get that from USDT, 70 cents. How close does that get me? 14, 140. Yeah, this will do it. So I'll swap the last USDT. All of that USDT also came from trade fees from farming pools USDC, USDT. All right, there we go. Now I have that. So I guess I might as well do it. Since I just talked about it, might as well just follow through and do it. So I'm going to go now to my FTW. I'm going to say transfer to FTW, which is the token wallet. Transfer 1.5 and some change. 1.5 million and some change. Sent. Cha-ching. And then I'm going to grab my other ledger, which has my other seed phrase, which has my FTW account on it. Because I'm kind of crazy. I have multiple ledgers and multiple trezors and all that stuff. But yeah, let me mention.
Monosorte says, "Hey all, who's ready for regret season?" I think DNA already posted about that in our Discord. Where he's like, "Yeah, I bought like some NFT for like 0.2 ETH a few months ago. Now it would have been worth like $1,000."
Yep. Hold your ETH, baby. You wanna? I'll show you what the bulk of my yields farms are in. Here. Let's see. Switch this over. Show you. Let's do vault pool. Bitcoin and ETH. ETH and ETH and Bitcoin and ETH. You're not going to find many shit coins just yet. I'll wait until the Bitcoin dominance trend shifts back down. Right now, Bitcoin's pumping. It looks like it's on a course to about 100,000, 120,000. So I like Bitcoin. Lots of it. And it pays pretty good. 23 bucks a day. 62% on this one, 53 on this one. And then this one just being exposed to Ethereum, obviously a lot lower. But both of these assets are also Ethereum stake derivatives. So they're both also earning stake yield on top of the trading yield here, APY. It's a good way to hold ETH. But back to the more dumb bullshit that I'm doing versus actual investment strategies. I'm gonna go to log out and sign into my FTW wallet. Now that I've connected the other ledger, let's enable support. Sign. This ledger's also like the firmware is up to date, and the more up to date firmware, you have to click so much more to sign transactions. It's annoying. My older firmware ledger, it's like, do you want to sign in? And you just click yes. On this one, it's like you have to read the transaction. It'll be like click to say yeah. Oh, it's a sign in. It's doing this. This is what you're doing, and then you have to click it, which is safer, better, more annoying. All right, here we go. So you can see now I have 501.5 million. Oh, and I see Pinguino. He's not being such a devil right now. He's just being a little sleepy bear.
Just sleeping on all my wires.
Not too devilish. So here, check it out. If I go to farms, these are the farms I already have incentivized, but I'm going to do a new farm for my FTW and Yeet. Because, like I said, someone else did this already. Yeet. And I think it's the 1% pool. I'll double check. Oh, I guess I can tell that it is the 1% pool. And then I can say 1.5 million, and I'll do 365 days. That's about what the oh, and then fee tier, I have to say the 1% pool, create farm. Sign that bad boy. Now it's all like, you want to sign this? Here's a transaction 1, transaction 2, with this is what the memo is, confirm everything, blah, 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 and it's confirmed. Farm created successfully. Hooray! So now if I go back to wallet and then farms, we should see it here, at least in a second. Or, you know, if I refresh here, assuming the front end here is going to load as quickly as I want it to. Hey, yo, there it is. So you can now see FTW Yeet is also on the field. Hey, yo, thanks for the subscription.
Yep, we are both back in SoCal.
Just got back last night. New York is incredible. What a city. Great food. I love how busy and how big everything is. It was wild. Also, getting to see Paul perform at the UCB stage there with the guest was somebody who's currently on the SNL cast, which that was kind of cool. I got to see the Wicked play on Broadway, which the movie's coming out soon, so that I feel like is also of the moment. Yeah, all of that was cool. Plus, hanging out, going to see the backstage of that, hanging out with the actors in the Broadway show afterwards. All that stuff was really like a treat, kind of a special kind of thing to do. And then in general, just seeing the city, we went to like try different pizza places, and I will say, great pizza. There's also not great pizza. And for people who say you can't get a good slice of pizza in LA, I would say you're not looking, because I feel like you still have to go to a good place in New York if you want a good slice. And yes, that slice is probably better than a good slice in LA, but a bad slice in LA is just as bad as a bad slice in New York. And then for me, for the bagels, I will say maybe bagels just aren't my thing. Like, I was very underwhelmed by I went to a like Russ and Daughters or something was like the name of the place. Russ and Daughters. I don't know. It's supposedly one of the famous bagel spots there. I got there like the classic bagel and lox, which is like a smear of cream cheese, some salmon, and some capers on a bagel. And you know, it was fine. It wasn't bad, but I definitely wouldn't wait in line for shit like that. And personally, I felt like it was a bagel. You know, I can get bagels anyway. I can get bagels at Costco. And I know that that's blasphemy when it comes to like New York bagel enthusiasts, but that's why I said maybe I'm just not a bagel person, because
I mean, you don't really eat bagels very often here.
I don't really eat bagels anyway. And when I do, it's like, yeah, it's a bagel. Honestly, it's a little bit dense. Like, as far as like what I want my bread to be, it's a little too dense, like a little overwhelming. But I don't know. Like, it was one of the places that was highly recommended. It was well visited. Like, you had to pull a number, and it took probably like half an hour before they even called your number. I don't know. There's also a Reuben place next door called Katz Delicatessen, which is also like a world famous, I guess, like Reuben spot. And the line was like 2 hours long. It wrapped around the building, and it's just like there is no sandwich that's worth that line. Like, I might be good, but like there's no especially not a Reuben sandwich that's worth waiting in a 2 hour line. At least for me. And then again, that might just be maybe I'm just not a Reuben person. Like, if Reubens are like your thing, then you know, get in line, baby. But I saw that line. I was like, nah, we're not doing that.
I do think,
But other than that, go on.
like, pizza's definitely better. As you're saying, there's bad pizza, but it's like you're also not taking into account the volume of pizza. Like, every
Yeah,
block, there's like literally like
that's
every
true.
block, there's a new hole in the wall pizza place, and yeah, a lot of those are not good. But I was saying, like, you got to get up to $4
But
to
they're not bad
$5 a
either.
slice. Like, if you're paying under $4 a slice, you're probably getting shitty pizza. Like, You can't like
But if you're paying 99 cents for a slice of pizza, I'm also like, I don't know. You get what you pay for, and it's for like if you add the asterisk like for 99 cents, it's a good slice. Just like, an In-N-Out burger is a good burger for the price. It's not the best burger in LA, but for the price it might be.
my parents really don't like In-N-Out. I was
I'm not a big
getting it
fan,
wrong, but
but I can't say that too much out here because they'll come after me. In-N-Out
In-N-Out's
is like the
In-N-Out's fine. I
it's
don't
like
know, the animal style's
fine.
definitely
Yeah.
unique too. Like you don't really get the animal style. Like In-N-Out's its own thing. It's almost like McDonald's, where like nothing else quite tastes like it because it has its own like flair, which I like.
Yeah.
Like if you want the In-N-Out taste, you're not gonna get it from anywhere else I know. But it's definitely not like. It's also fast food. Like there's non-fast food shit that's better than fast food. Every genre of food.
Yeah, exactly.
All right, we should
Uh,
get
I
into crypto stuff before we go off the rails. Tomorrow we can do our off the rails.
That's true. Okay, cool. Let's do that. I guess let me do this last step of what I was trying to do here. So logging out of my FTW wallet and jump back over to my yield farming wallet and stake myself to the pool I just created. Oh, it didn't like that, so I have to actually disable and re-enable ledger support because I switched devices. Okay, let's try that again. There we go. And logged in. And now if we go to farms, and maybe I refresh because I should have a lot more pools than this. Let's go to the Yeet pool. I feel like, yeah, there that is. Manage. Or no, I guess I have to go to the staking, to the farms page. And there it goes, not staked. So let's stake. Stake while the percentage is infinite. Signed, and boom. There we go. So now you can earn Yeet and FTW in relatively
This
similar parts.
Infinity.
Yeah, Infinity
It says
APR.
nobody
I
staked to it right now. I think.
expect that to drop to like 10 or 15, just like these other ones. But either way, it's kind of cool to see, some other projects adding this yield to my token pair. I didn't ask for that or talk to anyone about that. That just kind of happened. So I'm going to return the favor by also incentivizing it. And let's see if I refresh it, if the infinity actually drops to like the real number. Oh, we'll see. But yeah, other than that, yeah, 35. Actually, I guess that makes sense because it's a combination of both of these. So cool, fun. So now I have a little bit of this going on. Everyone else who jumped into this pool with me is gonna hopefully also, restake to. So I guess here, if any of these are your wallets, these 1, 2, 3, 4. If any of these 4 people are someone watching the chat, you might want to go. You might want to go and stake to the new pool rewards I just added
Is
to
that
this.
SSURE?
SSURE. Yes, it is.
That is Walter.
Hey, Twalter, there's a new pool for you to stake to. I think
Well, that
you
Twalter's
also
in
are
our
part
chat,
of like.
though.
I think he's in all of my pools. So if I go to like the FTW Wolf, I'm pretty sure I'll find SSURE. Yep, there he is. He's usually like the guy right behind me. So it's like project liquidity. I'm yield farming, and then there he is. And I feel like, I mean, with what I've been doing with FTW token, you should be pretty happy with the results of that. I mean, I know I am in my personal wallet, and the project wallet is doing fine. And I just keep buying back into it with yields, but we can talk about that on another day. Let's actually look at the crypto market like Lewis is suggesting. Let's start with Bitcoin, and we're looking at Bitcoin on the daily chart. And you can actually see here, we had been looking at for months and months and months. We've been looking at this cup and handle. So here's our cup, big old cup. Let me double check that we're not in logarithmic scale. No, we're not. We're in regular scale. And then so this blue line here represents from the base of the cup to basically the top of the cup, where these 2 blue lines, this channel represented our handle, and we were looking for and waiting for a breakout of this handle, especially on the weekly chart. So if we go back to the weekly chart, we can get a little cleaner version of this. And so you can see a few weeks ago we were getting that breakout, then we got that pullback to retest, which again we were expecting that retest pullback to then turn the channel, top of the channel, into support, which also lined up with the strength band here of our MACD indicator. And so that actually did happen. We found that support. So right around here, the breakout, like all in move, like we're looking for a breakout, and then we would take the range of this, this bottom of the cup to the top of the cup is now the range for our breakout. So we're looking for this breakout to play up until between $110,000 to $120,000 per Bitcoin. We're already well on our way. We're about halfway there. When you can also see here on the weekly now, we're approaching overbought. On the daily, I think we are also kind of flatlining on overbought. So, nothing's going to break out in a straight line, although you wouldn't know it from looking at the last few weeks. But this is kind of like maybe expect a bit of volatility on the continued way up. But you can see, with how aggressively this breakout has played already. Let me refresh the chart. You can see that our bull market support on the daily is all the way at 72, between 72 and 76, which would be quite a pullback from here. So we do have room for volatility to basically dump like 15-17% down, find support and push back up and to higher highs. So if you are going to play, long swings on this market, have a stomach for that kind of a pullback, because that still is well within what's normal and expected for a bull trend. So we absolutely, looking back at the weekly, we absolutely got our clear breakout. You can also see with the Trading Buddy indicator that we've been using, we got our bull market signal and the flip to that green band a year ago, and it never told us that it never flipped to bear, it never changed colors. So even though we were a little bit here getting kind of like shaky below the band, we never got a flip of the band to red, we never got a bear print. So if we had just been following our the MACD indicator, I mean, we'd have been in around here, and we're looking at a 300% profit since the bull signal and confirmation. Pretty good, especially if you're adding leverage to that. And of course, with the target breakout, we're looking at a targeted about 430% profit on that single indication. It's quite nice. But we also, we'll check in on this week to week, see how the picture develops. And now we have finally gotten, it's breaking out, big moves up. Bitcoin dominance is growing, which means, more money flowing into Bitcoin than altcoins at the moment. And for that whole narrative of like the alt season, altcoin follows Bitcoin motion, what we want to see is basically Bitcoin play out this trend to hit basically the target from this cup and handle. And once it hits here, we expect then to find some resistance, and that resistance should then translate into Bitcoin either moving sideways for a little bit or maybe pulling back a little bit, and during that pullback, money flowing from the Bitcoin markets into the altcoin markets, and that kind of giving us the alt season that everybody's waiting for. As far as retail crowds go, I know a lot of people are like, oh, retail investors aren't here yet. I will put it this: we are retail investors. If you're watching this stream, if you've bought Bitcoin, even if you bought it as early as I did in 2013 or whatever, that doesn't make you an institution. We're still Bitcoin retail investors. So retail is here, but definitely not in the masses that it was, at the peak of the bull market. Like at this point, most people are still unaware that Bitcoin is hitting all-time highs. Even this last week when I was talking to people in New York who work in finance, I spoke with a few people who work on Wall Street about some. I mean, I love financial like protocols and stuff. So I was really excited to talk to people who actually understand half of the shit that I'm talking about. But when I was talking to them, a lot of them were like, "Oh yeah, but those aren't crypto markets dead? Didn't those things?" And it's just like definitely not. Crypto markets are seeing $2 billion in daily volume. Like if we look at Uniswap, for example, Uniswap is the kind of OG protocol out here. And if we look at let's see, where is Explore. No, I want to see like. Why don't they have like they don't make the stats super easy to see anymore? They used to just have like a like an overview of the statistics for Uniswap. Let's see where I can find that. It used to be like under. Let's go to pools. Pools. These are all my closed positions from this wallet. Ass loads of Uniswap liquidity pools, but and that's just on base chain. Let's see. Transactions. Let's see. This was a lot easier to see a second ago. Protocol vote governance developers. No. I want to see statistics. Let's see. I'm just gonna look for it.
Big Wig's asking if you have any longs open. Winterfell's asking, is it?
So I'm looking at like right now for I don't have longs going other than spot longs, meaning that like the vast majority of what I was in like stable coins is now being held in like I was showing off like these positions where it's like Bitcoin and ETH like staked ETH derivatives paired with each other, or Bitcoin and ETH just straight up on Uniswap. And that's going to be, like I said, I'm expecting Bitcoin to rise faster than ETH and then hit a kind of peak where it will then sell into ETH. And so I'm expecting those pools to kind of like, climb together, and then the arbitrage, I guess, the difference between those climbs is going to generate a decent amount of APY. So you can see like 64% on Bitcoin and ETH, or 53%. And this is just trading fee APR. And this is just at Uniswap. These are really attractive pools for me. So this is like, I mean, a big chunk of my liquidity is just sitting in those pools. It's very set and forget. And I love Beefy, especially these CLM pools, is basically like they're concentrated managed liquidity pools. So Beefy actually is adjusting the, like I guess here we can look at it like this. If we go to vaults and my position and maybe clear the other filters, we can see like this is how a pool like this works. Is you can see this is like the price range, and then the bars here, if I pull it up, you can kind of, I guess, yeah, each you can see how the range is like, between 0.033 to 0.047. And then here you can see it changed, 0.036 to 5, and then here where it jumped. And then it's the same, it stays the same, it stays the same until the price action climbs beyond the like rebalancing zone. And then Beefy manages that, and it will change our liquidity composition. So you can see kind of like the long bar here is the entire range that we're supplying liquidity in, while the line in the center is showing us the price relative, the Bitcoin price relative to Ethereum, or the other way around. We can swap it either way. You can see the price. And so this is still concentrated liquidity, but I'm allowing Beefy to manage the range for me so that I don't need to make sure my pools don't fall out of range or whatever, making this a really simple set and forget position. And Beefy has a fantastic track record. I think they hold quite a bit of, about $300 million that's being managed by the Beefy vaults. And in the past, when there have been exploits of protocols that Beefy is farming, Beefy's concentrated liquidity management team has actually saved their liquidity by pulling out of those pools before the most of the damage was done. So that all of those things make it pretty easy for me to justify paying the fees that are charged for managing this liquidity to Beefy. Of course, if you go to this, you can also come here and farm a pool like this that's doing 588 million% APY. There's also obviously high risk nonsense you can do here, but it even gives you a nice little section. You can go to blue chips, and it'll like isolate only pools that are considered. Oh yeah, thank you. Oh, that's good. Hey, I got to do that too. I'm pretty sure.
I always forget you have to redo it every month. I'm also gonna cancel my Prime soon, but
so or correlated is nice. Correlated is like, so here you can see like this is all Bitcoin, this is all ETH, but this way it's like, oh, if I want just Bitcoin, This is T Bitcoin, which is Bitcoin issued by the Threshold Protocol, and WBTC, which is wrapped Bitcoin. So these are both basically Bitcoin bridged tokens on Optimism, and if you supply to that pool, you can earn 57% APY on your Bitcoin with pure Bitcoin exposure. So there's quite a bit of like options. If you go to blue chips or you go to correlated, if you click stable coins, these are now all liquidity farms with stable coins. And you can see I've also organized based on APY. So you can see, like, for example, the most highest yield APY pool for stable coins right now is this AAVE I'm not super familiar with this, but if it exists on Beefy, it has been relatively well vetted by the team. And you can just click here and you can scroll down and you can actually read about what the strategy is and then the details of what those assets actually are. Visit their website, look at their contract address, read their documentation. Really cool tool, even if it is just to do some research on maybe what pools exist and what you want to participate in. Plus, what is this thing? 200% APY on pure stablecoin exposure. You're not getting that at the bank. You're not getting that at at the treasury with a bond either. And I mean, that's pretty high. I also wouldn't expect that to last. So you can actually see the APY has been, here's the average, it has been like 18, 20%, and it has recently spiked. So that might be also something to consider when you're assessing which kind of pools you might be interested in farming. But again, I think farming these pools is really passive, really easy to do. And like I said, I'm just going to sit in those Bitcoin and ETH pools until I see the Bitcoin price at least hit the top of our channel there. And then I might actually rotate into like ETH and potentially some other altcoin exposure, or maybe more aggressively ETH exposure. But for now, I think as far as long position goes, I would consider those long positions because they're spot long. So it's not leveraged. It's just I've bought the assets and I'm now participating in earning some APY on them as well. On top of that, yeah, I do trade perpetual longs, but at the moment I am not open on any of those. I was traveling over the last week, so I wasn't actually able to manage quite a few of them. And so what I had been doing was trading some option contracts. I think I shared in our Discord how I did option straddles. And I guess as a really quick way to explain what that is an option contract is basically like you buy a contract that at a certain point in time is worth whatever the strike price is. So if we're talking about let's go to the Bitcoin chart. We're talking about like Bitcoin right now is $90,200, 250. And so if I were to say buy a call option at it with a strike price of $90,000, then that option, let's say I buy it and I say it expires tomorrow morning at 2 a.m. So if tomorrow morning at 2 a.m. the price of Bitcoin is higher than $90,000, the amount by which it's higher than $90,000 becomes my profit for that option. If it is lower than $90,000, the option itself is worthless, and whatever I paid for the contract is forfeit. I've lost that money. And so what I was doing while I was traveling was basically buying those types of contracts in both directions. So I was buying long and short contracts at the same time with the expectation that the market movement is so aggressive, either up or down, because of, I mean, look at the charts. I mean, look at, each day here is doing like this big old day, like that one day, that's 10%. So when you buy an option contract that expires, 24 hours or something, it costs maybe like 0.5% of the current spot price. And so as long as if I buy both directions, I'm effectively out 1% if the price doesn't move. But if the price does move more than 1%, then anything above 1% is going to cover the cost of both of those contracts. And beyond that becomes profit. That kind of a strategy is called an option straddle. It does not have the risk of being liquidated during volatile market movements, which is why it's easy for me to buy a position and then go out into New York, eat food, go see shows, and come back at night to see how it's done, as opposed to trading perpetual future contracts like what we would do on GMX or Gains. Like here, if we were to, go and buy, a long or a short position here, like you could see if I take $1,000 and buy a long position on Bitcoin right now, You can see that where is that going to show here? My liquidation price is with barely any leverage. So let's say if I do five times leverage, so this would become $1,000 of collateral representing a $5,000 exposed position long Bitcoin. At that point, if we drop to $74,000, like you can see whatever the price here is, it's updating in real time. Once we drop to that point, this position becomes liquidated, and I would lose that initial collateral. If we climb, anything above the current opening price, I would be exposed to 5 times the upside. But of course, when I'm not near my computer, when I'm not able to manage a position like that actively, this is a lot higher a risk, because during volatile market movements, you can see something like this happen where, like, oh, look, if the price pulls down to here, I get liquidated and then it pulls back up. Maybe by the time I get home, the price is actually higher than when I entered, but while I was out, my position got eaten by volatility. So using options to kind of hedge against volatility and basically play both sides and just kind of like straddle would be considered, instead of betting long or short on the market, I'm betting that the market will be volatile, like that the market will move dramatically. I don't know what direction, but it'll move more than 1% or something like that. And so for that kind of a bet, opening both sides of an option straddle is actually pretty easy to manage. But let's get more into derivative asset trading later, because that is kind of high concept. I don't know if people are really interested in all that. But let's look at what the market's doing. So here we are, our daily chart. We've gotten our breakout, and look at how clean we've been bouncing right on the upper side of the daily trend. We got our bull print. We got that deviation here, breaking out of that out of the handle of the cup and handle pattern already, like back in September. And then we finally busted out of our cup and handle in October 14th here. Big day moving up. We kind of found our resistance exactly where we expected. Remember when we were getting this push up, I was like, hey, we're about to hit its old all-time high. So you can see here, if I, mouse here, this is where the old all-time high happened. And it was like, yeah, we're going to probably get a pullback once we hit the all-time high, because that is, once we hit that price, everybody's in profit who's ever bought these assets. So that happened right here. You can see we pulled up right to the old all-time high. Like if I see the very top of this candle, you can actually see the dotted line forming from my cursor there is very much lining up with the top of the bull run before the handle started. And so you can see that happened there. We did get the pullback. The pullback formed a higher low, bounce, finding support directly on our strength band, exactly what we'd want to see. Also, right as it becomes oversold, this was an insanely clear entry point for time to go long. I'm just sorry I wasn't able to go live while I was traveling to be like, everybody buy. Um, at least Sid was still around, so at least on the Maxi side of things in our Discord, we were like, it's time, we're going all in. And yeah, I mean some of the screenshots being shared in there were pretty fun to see. Like one of the members threw like I think $90,000 at it right around here, and then shared a screenshot yesterday of his portfolio at 120,000. So they're up 30 grand in like 2 weeks. So he was very happy. That's like the second or third time he's made big swings like that too. And he's always like, oh wow, like in one day I made back the like 2 years worth of like the membership costs here, which is great if you have the money to throw around. But of course the idea is like, hey, we're trying to participate in this stuff with like tens of dollars, not tens of thousands or hundreds of thousands of dollars. And so that's kind of more what we've been doing on this stream here when we do our Wax Wednesdays, or what used to be Tech Tuesdays. But let's take a look at what we're expecting now. So you can see on the daily chart a little bit on the overbought side, but you can also see we are now at, if I hide all my other lines here, and we can even go to the weekly here. This is the all-time high price for Bitcoin. We've never been higher than this. There is no charting of what is the next resistance, where are we going to find resistance, where is it trying to pull back. So now we're in what would be known as the price discovery zone of a market. And so it can moon all the way up to like wherever the fuck, all the way to like the moon, and then continue to Mars. without pulling back or doing anything. It's very difficult to say where we're going to find resistance because there is no resistance to track. We could say that we would know where we'd find resistance last time because we were like, okay, well, we're going to find it at the last resistance point where we got our all-time high last time. But once we pass that, there is nowhere else to, like, where else would we find it? Well, the only way to know that now is with our TA target for our breakout, and that is why Sid and I at least are projecting at least some, flat or a little bit of a calming down effect on this market around 115, 120K per Bitcoin. But again, that doesn't mean we can't get a pullback tomorrow, and like I said, expect to be able to stomach about 17 to 20% in a pullback, because all of that would still be very in line with, I mean, like we can get big up candles with big down candles. Like here's an example of that, where we got a nice breakout pulled up here in this bull market, and then a substantial dump back down, where we pulled from the high of this candle to the low of the next week's candle, 30%. So that's pretty devastating, especially if you just entered your position and then over the next 2 weeks, 30% of it gets wiped out. That's quite a bit. Like if you put $100 into it, it's down to $70. It doesn't feel good, but be prepared to hold through that, because hey, had you actually held through that, even if you did buy at the very peak of this run, you're still able to ride us up to an additional 50%, more in profits. So this would have still come from like 40 all the way to $60,000 without ever being signaling that we've lost our bullish sentiment. So again, expect volatility in a bull market. You do get pretty steep drops. So I do want to reiterate that yes, a bear market is generally like where we see a lot of the market value get decimated, but in bull markets there are steep pullbacks. Like look at this candle here, for example. That is definitely part of the bull market. And you see in that 1 week, we saw the market sell 24% on 1 week. That's most likely going to be a bigger negative day than any of the days in the bear market. Any of the weeks, any of the individual weeks, even like this long week here, including the wick. Okay, also about 35%. So it was about close. Like the worst bear market week was about as bad as like this pullback here, which is part of the bull market. So be prepared to stomach volatility. It's part of a bull run. Especially seeing such an aggressive climb now, we need to be aware that pressure builds on both sides of this stuff. And at the same time, it's hard to see where the pressure counterpart is, because we haven't had a historical like chart information to base it off of, which is generally how you find your resistance levels. At the same time as we're seeing Bitcoin pump to its new all-time highs, you're seeing Ethereum, and by extension, I would say the altcoin markets, not quite finding that same, we're definitely not at our all-time high yet. We even haven't made that all-time high at all this year, even before kind of it falling into that cup and handle pattern. So with Ethereum, we're still, lagging kind of behind, still waiting for that to turn. And I think that also comes with the Bitcoin, bull run hitting its target. And then as it maybe doesn't pull back, maybe it just hits its target and starts like flatlining. But as it, cools off on the upward move, then I'm expecting to see some of the value flowing into like the altcoin markets a little bit more aggressively. That said, looking at Wax, so let's look at Wax now. We'll go to the daily chart for Wax, and we actually hit our 4 cents yesterday. So you can see, or 2 days ago now. So you can see our purple line here. This is the all-important resistance level. We've kind of like marked as our bear market floor. Once we're back over this, then I'm expecting we can continue to push, at that point from 4 cents to 10 cents, hopefully blast through some of these old resistance levels. We'll keep those marked out so we can keep an eye on them, and we'll know where to expect a pump to kind of chill. But exactly what we would have expected to see in Wax is what's playing out. So we did get our push up. It's moving up with the rest of the market, but we're also now finding our first level of resistance, which is exactly where we expected. See the purple lines? I mean, that line's been there for over a year now. I didn't like redraw that before the going live or anything. Like you can watch old videos. It's still sitting at 04054. So right there is exactly where we expected a resistance to happen. So what we're needing to see now is this is clearly a higher high on the daily chart. You can see these last highs, even though we were getting this high and then this became like a lower high and it's starting kind of like pulling back. This low still higher than these lows. So still kind of, we could say if we go down to the weekly chart now, we can kind of find a little bit cleaner version of what we're looking at, where we are getting like what is either a higher low or a double bottom here, which is generally a bullish, like building a base to kind of push up again from. But what we really need to see, and still is this still the case that I've been saying before, what we really want to see is a push above and a hold above 4 cents. We got on the daily chart, we got to that. We haven't held it yet. It hasn't flipped yet. But when we do get that flip, that's going to be, very bullish indication that Wax is reaccumulating some steam here, kind of pushing higher again. So with what we're seeing here on Wax now, is we're seeing it push to that 4 cent mark. It's meeting its resistance exactly where expected. So nothing unusual about that. And then that pullback that's starting here now is also not unexpected. You can see our SRSI, our strength index, it was showing that the strength of this run was overbought. So it needs to calm down. We need to kind of like rebuild. The RSI needs to basically fall back. And what we want to see now is this fallback forming a higher low. So basically, ideally, we want to bounce on our strength band. So somewhere around like 3.3 cents or so could be where we find good support here, which is also going to line up with kind of this last peak there. So it should be right around that peak, right around where we've been kind of finding support. You can see these like kind of we're bouncing on there too. There's been a few times we've been bouncing right around 3.3. We're looking for like if we are going to get as aggressive of a pullback as possible while staying bullish, that would be it. A pullback from here, 3.3, and then a reattempt to cross this, like basically pushing to a higher high. So what we always want to see when we're seeing a price breakout is higher highs following higher lows. And if we go back to like the Bitcoin chart, for example, you can see that's exactly what we were getting. So like during this whole handle side, we were getting kind of lower highs or highs, lower lows, lower highs, lower lows. Until we broke out of that and we got finally our higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Where does it low? Maybe find support here, maybe here, maybe here. We have a decent amount of room for it all to become a higher low. And then after that, another higher high. You asked earlier, is it too late to enter a position here? If you're talking about leverage trading long, I wouldn't open it right now. I'm not opening it right now. If you see my like GMX and all that stuff, it's not open with leverage at the moment. I am waiting for that pullback. I want to see that pullback kind of again find support, like slow down and look like it's starting to form a higher low. And I want that higher low to correspond with the RSI being oversold, just like we see here. So this is like exactly this right here was the screaming at us with everything that we know about technical analysis and chart reading. Right here, we were getting the buy signal of the bull run, like right here, where it was like, we were getting higher highs, higher lows, higher highs, higher lows, higher highs, higher low with an exhausted SRSI right on our strength band after a breakout of our long-term TA pattern, which is the cup and handle. This is like, oh, we're getting a breakout like this thing and then this pullback. This might have been like, okay, could we maybe fall back and this whole chunk might have been a deviation? Yes, maybe. But once we got this next candle here, and that was forming a higher candle than the previous one on the daily chart, then I would be like, okay, it's now forming a higher low. And so I'm maybe entering around here, so around 70,000. Sure, I didn't catch the very bottom, but from 70,000 to now, I still caught, even to right now, still that's a 27% increase. That's for a swing trade, especially for a swing trade over 2 weeks, that's phenomenal. The goal isn't to catch the very bottom and sell the very top. The goal is to understand where the trend direction is. So are we trending up? Are we trending down? Or are we ranging? Ranging being moving sideways in between a range. And so this has given us the sense like this is our kind of like trending down, and then once we broke out of this, this would have been the signal of like, hey, we're confirming the breakout of that trend. We're now trending up. And then once we have a confirmed change in trend, which we got here, because again, this is after we've gotten, okay, this is the first time we're getting a higher high, but it's still, it's not like higher than like some previous things, but okay. Then I would say this is kind of the first higher low, and it only really registers as a higher low until it broke out into that next high, right? So then I'd say this higher high here would have been the first kind of like time where I'm like, okay, you have my attention. Like, yes, I see that the trend is starting to reverse. This low, I wasn't willing to act on immediately to ape in. It was not clear to me that this was the higher low yet. And then here that it continued to push up. So it's like, okay, very much now the higher high is confirmed. And then, like I said, here we found that support higher than the previous wicks, higher than the last low. And then we started moving up. Right around here is where I was very comfortable being like, yes, we have a higher low following multiple higher low, higher highs. This is the confirmation. It's time to run. And that's what we saw. That's what we posted in the Maxi Discord too, for anyone who's following over there. And that's what's been playing out. So now, yeah, we are in price discovery mode. Yeah, we're over $90,000 for Bitcoin. And yeah, like the news articles and the stuff I've been seeing and the people I've been talking to, it's still flying way under people's radar. So, there's something to be said about the time of year that it is. I think we're about to see a lot of people getting back together for like a Thanksgiving, which during those kind of holidays is generally when that retail crowd gets to get back together with the weird Bitcoin uncle who's going to pitch them on Bitcoin over Thanksgiving dinner. And once you have all this price action and all that like excitement back in the air and people like telling each other about it, I think then you get more of that, the hype, the average person, and that's when you start to get, the big runs, big like retail money coming in, and that kind of stuff can also be very volatile, very short-lived, because new money into these markets at these prices tends to be very flaky. They are going to potentially enter at like 90 or 100K, watch it pump up to like 115, 120, which is again where I might take profit targets are for this run. And then it could hit those targets and then fall back down to like 80, 60s, even maybe 60s a little low, but like 70,000. But if you're falling from 120 to 70, that's huge taking out. And generally the new money, the new people who just bought in are the ones to get shaken out and spooked early. The people like us who are watching the stream right now, I mean, you guys have been through this before. And so I think we're basically getting our patience paid for, like rewarded at the moment now, but also we will be more able to weather such volatility than brand new investors like mom and dad or grandma and grandpa who maybe were convinced by Uncle Bitcoin over Thanksgiving dinner to throw a couple $1,000s of their liquid investment capital into something they don't really understand, like Bitcoin and crypto. And then once it starts moving south after, admittedly maybe moving north for a few days or weeks even, those people are very fickle, generally speaking, and are easy targets for shaking out paper hands. So obviously this doesn't really apply so much to us here who've been watching the markets for at this point like 3 years, looking at it every week and having a better understanding of volatility and an idea that it's expected to see that kind of a volatility. But at the same time, it's just the nature of psychology. Like when people do enter something new and then they see it drop, it's hard to stomach. It's hard to be like I'm gonna ride it out. Again, you and I, maybe we have the conviction to ride it out, but that comes from exposure, experience, and maybe even like enthusiasm for these assets or for the technology. since a lot of the new money that jumps into these like investments isn't here because they're excited about a global settlement system or a digital remittance or any of that. Like most of those people are here for quick money, and when that quick money stops being quick, they're very quick to head for the door. On top of all that, we also now have ETFs, which means grandma and grandpa can participate in those assets with their existing IRA accounts or with their existing stock portfolios. They don't need to know how to make an account at Coinbase or make a broker account with Gemini or whatever, crypto.com. They don't need to know any of that shit anymore. They can just stick with their Fidelity or their Robinhood or whatever the hell they're already used to doing and gain exposure to these assets. That really hasn't been the case last time around. So again, I think we are still early in this cycle, in this bull run. I don't think we're seeing the end of it. Like I said, even with our target here, you can see we're only about halfway through the current target playing out. And that doesn't mean that this is the end of the bull run. This is just the end of this pattern. And admittedly, the pattern has started in November 2021, December. Like this is old, so this is like a multiple year pattern. But once we hit the new top of this, it'll be time to see what's next as far as like, okay, what are we going to see? What's our next, what's our next pattern? What's the next indication of where we find support, where we see profit taking opportunities? But yeah, so far, I guess the takeaway is the bulls are back in town, and even more so than before. And I know I've said this before because we have, if we go to the weekly chart, we have been in this kind of a bull run now for a little over a year, if you will, especially based on what we've been watching on our charts here in the weekly. But now more than ever, buy the dip is a very viable strategy. So when you do see one of those days where we're like getting a 10% sell off, 15, or even even up to like 25%, like dropping out of these markets in the matter of like a week or something, that becomes a buying opportunity much, much more so than it was during the bear market. Because during the bear market, a 20 or 30% sell-off week might just be, a bad week in a bad year, in a bad month, in a bad year. Whereas in a bull market, bull run, a bad week of 20%, 25% selling off is a bad week in a good, month, a good year. So then, you buy on the bottom of the dip, and then within weeks from then, you should be very happy that you seized an opportunity. So again, buy the dip back on the menu for sure. And I would say more than trying to find the next dog token or whatever, sticking to Bitcoin and Ethereum blue chips at the moment is my play. I've been around this market for 4 cycles now, for a long time. And overwhelmingly, the biggest lesson I have taken from it is if I had bought and hold Bitcoin and Ethereum, I would have been better off across the board every fucking time. So take some of, I feel like everybody who's been here long enough kind of knows that already, but there's a difference between knowing it and actually sticking to it. So, keep your head clear, keep your strategy. And if you are considering this as an investment, understand where your exit points are. So if you are buying in, today, know that, okay, well, if we fall to this level, I'm going to sell. If we pump to this level, I'm going to sell, or I'm going to buy more or whatever. Like, you should know what you're doing before those prices. So if you are going to buy at $90,000, and then, like I said, if we fall, let's say we fall back to like 80,000, what are you doing? Are you going to sell it? Are you going to buy more? Are you going to average down? Are you going to average down your average out your exposure, average up your exposure, and average down your entry price? Have the answer to that question before the price moves, and then you're not stuck making that decision in an emotional time when when your money is actually changing, and that way it's that's also like a really difficult thing to do in a bull market like this. I mean, as I'm sure some of you've already run into, like, hey, if we bought this stuff, like at 55,000 2 or 3 months ago, and now it's almost doubled. Should I sell it? Well, what is the plan? What you should do is stick to the plan. So keep that in mind, because investors have a plan and we're following a plan. It's a strategy. A strategy isn't something you're making up as you go. So that's something I'd like to instill again. I'm gonna go fill my water while the grubs are exploding, but I'll be right back.
It'll be for a wolf giveaway. Didn't get to announce it. Max was just like the Energized Bunny, just fucking going and going and going. I didn't think he'd stop unless I started it. I got a cat over here gnawing on my arm. Whoa, bite me. Tasty. Hey, don't bite my ledger. I don't know that Max answered the question about what do you think about ETH, but he kind of did, like, indirectly by saying he's waiting to buy other coins until Bitcoin dominance falls off. And Bitcoin dominance, when that falls off, it'll be closer to alt season, as they call it, where when Bitcoin isn't as dominant, the other tokens start pumping more. So I think ETH is like somewhat included that. Oh my gosh. Come at me. Rock metal, congrats.
GG.
You include like, is ETH part of alt season? Like when Bitcoin
I
loses
think so.
dominance?
I think, yeah, absolutely. I think ETH has the potential to actually make bigger gains once alt season kind of kicks in. It has, and part of that is due because, you know, look at, we haven't even hit our old all-time highs. If we just make it back to that, it's $5,000 per ETH. That's just where the next like major resistance is. Well, I guess the next major resistance is like 4,000. But yeah, absolutely. I think once ETH passes its old all-time high, it also will have that price discovery pump. And I'm still looking for a $10,000 ETH. Like as part of my sell targets for Ethereum, I have limit orders in right now to sell ETH at $10,000. It's not. Oh, like here's my old range. Like once we broke out of that, we never hit that back again. You know, once we broke out of this top red line. But yeah, it's definitely, ETH is definitely part of that. Other altcoins will see, you know, huge swings and huge drops. And again, that's why you really want to have your take profit target set before all this stuff starts kicking. It's the same, honestly, with like what happened recently with was Our Planet. Like I had stuff listed for Our Planet that I literally listed like 2 years ago. And when those prices hit, like sure, I could have got more wax for them, but I got what I wanted. And I wasn't upset, you know? Like I mean, some of my land sold for probably half of what they would sell for right now, but I got what I wanted. I had my price. It took a long time to hit, but like it's unemotional. It's just like, well, if we hit that price, I'm done. Like I want some wax back from this. And it worked out. But yeah, that's same goes for like most altcoins. And again, like I said, we're looking at Bitcoin now. It is on the daily chart and the weekly chart approaching a little bit of an overbought area, and that does give us kind of an indication that maybe we'll slow down on this huge meteoric rise. But it also isn't gonna, you know, tell us where is it gonna bottom out, you know, because again, the last support resistance is around 73. That would be a pretty aggressive correction. And it's, again, if it happened, it's within the bull side of this daily trend. That's still bullish. You know, so we can absolutely fall from 90,000 to like 75,000 over the course of the next like 3 or 4 days, which would feel like the world is burning again, but still actually be quite bullish. And that's why, again, you don't want to make decisions for yourself when the world feels like it's on fire. You want to make those decisions when you're level-headed, when you're like thinking clearly, and then when shit hits the fan, or when shit, you know, blows up in a positive way, you don't have to be there like trying to have a clear head, and you know, do I take profits or not? Like the other day my dad called me and he's like, oh, I just saw Bitcoin hit like 85,000, you know, should I sell? Nah, I was like, I'm not gonna sell. And I was like, what you could do is set some limit sells around like 90,000, and then just buy them back at 80 again. Maybe it happens, maybe it doesn't. It's never a bad idea to sell when you're in profit. And if you thinking, oh, I'm in good profit, should I sell? There's no reason why you can't sell some and keep some. You don't. It's not an all or nothing. It's not a binary system. You don't have to go all in, all out. You know, if it's like, hey, I went in gradually and now it's like, oh, I'm way up, my net is up, my average price is up, great, take some profits. If you haven't made a strategy of how to take profits, well, if you're in profit, maybe take 10% of your stack off the table. At the very least, if it continues up, you still have 90% of what you initially had exposed to the upside. If it starts falling, great, you captured some of that at the peak, wonderful. Both of those scenarios are not negatives. So keep in mind that too, you know, like a lot of people are like, should I go all in now? Should I go all in later? Should I sell everything now? It's like, well, have you considered that you don't have to do everything at once? You know, it's not an NFT. You know, you can sell fractions of a Bitcoin. It's a fungible token. It has precision. It has decimal places. You know, and then also I talked to quite a few people who are like, oh, Bitcoin's so expensive now. You know, I don't have $90,000 to invest. It's like, well, you can invest with $9 and then buy like 0.000001 Bitcoin. Like you don't need, you know. But again, it's like there's this psychology to the way numbers work, which is also why like $100,000 is probably a decent point to expect some resistance, just because this is like psychological significance of seeing a 3-figure number. You know, like a lot of people will be like, I'm going to take profit at 100,000 because, you know, I don't know how to do TA. I'm not like trying to chart read and like come up with, you know, targets that are supported by technical analysis. 100,000 is a nice round number. Great. Like, great. If that's your plan, good. Like, you have a plan that puts you ahead of most people. So I think the biggest mistake to make is to enter into markets, especially volatile markets, especially speculative volatile markets, without a plan, and then just, you know, what ends up happening is you'll ride it all the way to the peak and then also most of the way back down. At least that's what happened to me the first time around. You know, like the first time in, I bought at like $300 and then I rode it to like $2,000 or something, and then back down. There you go.
I'm holding on with my diamond hand.
That's it.
I'm holding on with my diamond hand.
Exactly. So don't be necessarily like fooled about the narrative that, you know, if you never sold, you've never made a loss or you've never realized a gain or anything. Well, I mean, I guess, but at the same time, that should then also apply to when you're in profit. Like, if you feel that way when you're at a loss and you're like, well, I didn't sell, so I'm not actually at a loss, then you should feel that way when you're at a profit too. Like, so if you're feeling really ecstatic about how much, you know, your paper profits are that you haven't realized, you should remind yourself, just like you do when you're at a loss, that like, well, I haven't sold it, so I actually haven't made a loss. In the same way, you haven't sold, you haven't made anything. You know, like the markets are volatile; they can change in a matter. I mean, look, just while we're here, it's been moving hundreds of dollars, you know, in the course of every couple minutes here. You know, like boom, $10 down, $30 down that second, 25 back up. Like it's volatile times, so expect that volatility to continue, and also expect the bull market to kind of continue at this point. You know, there's the sentiment is positive, the breakout, the chart information is positive, everything is signaling the next run in crypto, and the global stage is kind of set for hard assets to do well. You know, like overwhelmingly, you know, the economic plans that have been floated by the next administration are kind of batshit insane, really fucking stupid, and it doesn't make me want to hold dollars. At the same time, interest rates are going to go up on an international scale. Like you have the central bank of Japan caused that whole carry trade panic when they announced they were going to raise rates by like 2%, which they had to roll back because of the global fallout of that. Insane how fucking fragile these markets are. So again, hard assets being assets that aren't able to be, generated by some central authority to be like, we'll just print more money, or we'll just issue more shares, or we'll just, we'll dilute what you have in your current wallet with by giving out more to, whoever we decide gets it. That's bad for everybody in the system who isn't the people who are on the like inside who are getting assigned those new issues. So like, sure, the interest rate got cut last FOMC meeting, and that means interest is coming back down. And even if you look at the CPI numbers, inflation is supposedly back to like under 3%, which is normal. But who's going to the grocery store and feeling normal about what you're paying for the shit that you bought, the same shit that you bought like 5 years ago? So it's like that is a symptom of fiscal policy. And when you have asset like hard assets, and like I like hard digital assets, because unlike gold and silver, I could trade my Bitcoin on a like that. Also, I don't know if my gold is real gold. I mean, I went to a gold vendor, I have certificates, and I I used the density test to check how dense the metal is, which proved that it was as dense as gold should be. Beyond that, I don't know if it's real gold. I know that my Bitcoin are real Bitcoin. I know how to verify that. In the same way that like if I have a Monet painting on my wall, like honestly I could think it's a Monet, but maybe it isn't. And I fucking, and guess what, if you come over and you're like, that's not real, that's a knockoff, it's on me to then pay like an appraiser and like somebody to like very expensive rates to verify and certify that this is authentic. When I buy a Neon Space NFT, all I need to do is check that the issuing wallet, like the issuing collection, is Neon Space NFT, and then I know it's authentic. So like digital hard assets are a lot easier to validate, verify the authenticity of, and to exchange, and then also to exchange globally. Those things matter more and more in the world stage, especially the way it's moving. In these last few weeks, especially. But we'll see. Like nobody knows what happens tomorrow.
I saw
And
a fun thing on Facebook that somebody posted where like an artist, he bought like I think it was like a Warhol or like a Picasso or something, some like original painting, and then he made 1,000 or 999 replicas of that painting, and then he's
Yeah.
like, and then he deleted the information of which one's the original, and then he's selling them all for a price. He's like, you have a 1 in 1,000 chance to get the original, and there's no way to distinguish who has the original. I was like, that's kind of a fun. Like,
Badass.
he's like, they
Yeah.
all look exactly the same.
Yeah, exactly. And that's like, I've had like people when I lived in Lakemont at my parents' house. That's like a well-to-do neighborhood. They've had people come to the door to sell artwork, and it's like like acrylic paintings, and they're really beautiful, well done. And like I remember my dad being like, "Yeah, I like this, but it's like I don't know if a machine made this. Like I don't know. I can't buy this from you." And like the only way I would invest the amount of money you're asking for into an artwork is if it was from a gallery and the gallery stands behind it, and there's certifications and all this stuff is like, there's a whole. It's difficult to prove authenticity, especially in art, but also across the board in ownership. It's not easy. I mean, that's why there is such thing as like paper bonds, where like whoever holds the piece of paper is the rightful owner of it. Or like the title of your car. It's like, well, I could hand the title to Lewis. That doesn't make Lewis the owner of my car. Like there's records and redundancies over at the bank at the that verify that I own the car. I have to sign those over, and there's an intermediary, like a notary, who then confirms those transactions have been signed over. All that stuff in digital world that we like participate in here, all that stuff happens on the blockchain in one transaction, and it's trivial for the people involved to authenticate all that stuff. There's real value to that. It's hard to understand that value as somebody who maybe isn't part of a world that is plagued by fraud. So like, especially when I talk to like wealthy investors about like the merits that crypto markets have, a lot of those people are doing very, very well in the existing financial system. And so for them, the system isn't broken. And it's a lot more difficult for those people to see the value when the existing system works. Because it's like, hey, you can, I can use a DeFi market to trade perpetual future contracts without first in, first out order processing. That sentence alone, if you know what I just said, should be like, oh my God, that's crazy valuable. Like, why am I still trading at like my broker when I could be, avoiding first in, first out order processing or even order flow processing bullshit that happens in the equity markets. If you're some accredited investor who has like basically the way that the finance system works is if you have a lot of money, you have different access than other people. Like I can't participate, for example, in pre-market IPO offerings. Like when Netflix went public, before it traded on the stock exchange, I couldn't buy shares of that because I'm a nobody. It's like I can go kick rocks until that fucking shit gets listed by Fidelity or by like Robinhood or Charles Schwab or whatever the fuck my broker is. I can't participate in that market. But an accredited investor, which is a high net worth individual who has, the certifications to participate in non-regulated markets, they can participate in that. And so as someone coming from crypto being like, you can participate in a pre-sale of a new asset before it hits market, and you're telling that to somebody who already can do that in the existing system, they're like, so the fuck what? Like, I don't need crypto for that. And it's a lot harder for that person to then understand the value of it, at least in my experience. So again, there's a lot of nuance to all this stuff. And again, finance, I think by design is pretty complicated. And if you're not personally like fascinated by it like I am, I doubt you're looking into the shit deep enough to actually understand half of the words I just said. But that doesn't mean, it doesn't mean it's a scam or it's bullshit. And it's all, let's be clear, it's also that, crypto is full of scams and bullshit and confidence men. And because it's so doable in the crypto markets to turn hype and confidence into cash, that's why it's full of shit. Like, that's why it's full of scams and bullshit, is because it's so doable. You can't launch a meme coin like Dogecoin on the New York Stock Exchange and then have that coin gain a bigger market cap than like some of the biggest Fortune 500 companies in the world. If we look at the Dogecoin market cap today, it's bigger than like huge companies. Like companies you and I have heard of are smaller in market cap than Dogecoin is today. That's fucking batshit nonsense. But here we are. And that's the reality of these markets. And it's still early days. So, I mean, it's definitely not the like early adopters phase of crypto markets anymore. I think we've crossed that threshold from early adopters into like early majority, but we're 100% in the early majority phase. And what I'm talking about here is, let me look it up.
I want to read this article really quick.
Yeah.
For sale, one real Warhol print hidden among 999 fake. Collective Mischief sold the 1,000 drawings for $250 each in a stunt designed to draw attention to authenticity in the artwork. As pop art icon Andy Warhol won fame in the 1960s by creating sculptures that mimicked the mass-produced wares sold in ordinary grocery stores. Playful and controversial, works such as Brillo Box and the Kellogg's Cornflakes Box challenge conventional notions about how art should be identified and valued. More than 50 years later, Warhol's enthusiasm for the mass production of art, as well as his often irreverent attitude towards the establishment, has inspired a similarly boundary-pushing project by Brooklyn-based art collective Mischief. According to Oscar Holland of CNN, the team of about 20 artists programmed a robotic arm to create 999 copies of an early Warhol print titled Fairies from 1954. The whimsical line drawing depicts 3 nude fairies played with a jump rope. The collective then placed all 1,000 versions of Fairies, one print created by Warhol, 999 identical robot-generated fakes on sale for $250 each. As of Monday, the works were listed as sold out on the Collective's Museum of Forgeries website. Theoretically, buyers should have a difficult time discerning whether they've received the real deal or one of the 999 forgeries. Mischief claims that it does not know which Warhol lookalike is the authentic one. Collective destroyed all records indicating which piece was which and put the 2021 prints through a degradation process to thwart the chemical analysis, reports Daniel Cassidy for the Art newspaper. Each work now bears the same title, possibly real copy of Fairies by Andy Warhol.
That's awesome. I love that, like, as a concept to do that to fucking artwork. That's really fucking funny. I mean, it also really illustrates the fucking issue of that we're discussing here, authenticity, you know, authenticity in ownership, in distribution, stuff like that. It's not straightforward, especially with artwork, but across the board, even when it comes to like printed money, you know, like there's a huge problem with counterfeit money worldwide. And you know why? Is because you can fucking print it. You can print it on your own printers. I mean, yeah, they have to be nice printers. You have to use the right ink and stuff. And like, sure, it's really difficult to do it, but like, it's not impossible. And it is worth it, you know? But here's what I was talking about. Like, I'm if we're talking about the market, this is like technology adoption life cycle. So if we're talking about crypto as a technology, I would say we've crossed the chasm. The chasm being right here, we've crossed this chasm probably in the last bull market, but I don't think we're quite at the peak of the early majority yet. We're still kind of like here, early adopters leading into the early majority for the technology itself. And so it's still on the upswing here, you know, late majority and then laggers. This is like the last, you know, when basically after the early majority, like around here is when you can expect to buy McDonald's with crypto wallets. But like where we are here, I would say, yeah, around here, I think we're across the chasm on the way up, still in the early adopters, probably getting closer to early majority. And I would probably say that after crossing the chasm, the early majority line should be a little closer to here. But either way, this is kind of the illustration of what I'm talking about when it comes to like the adoption of, you know, these assets and where we are. So when people are saying we're early to crypto, you're early still to Bitcoin. Is it too late to participate? No, you're on the like left side of this bell-shaped curve still. And while we maybe aren't, you know, the innovators anymore, I mean, 2-3 years ago in the NFT space, I would say we actually were. You know, we pioneered some of the things that happened in NFTs. If we were participating in this stuff like 3 years ago, so that is, you know, that is maybe even barely crossing the chasm now. But when you're talking about cryptocurrency as a currency like Bitcoin and stuff, I feel like that, you know, the innovator side of that was like maybe back in 2012, 2010. Like that's, yeah, when the big mining companies started like putting real money into building mining operations. That was an insane prospect to put that kind of money behind. It paid off really well, but it was a big gamble. Those people were innovators, I would say, as far as technology adoption goes. And then, you know, I would say, as much as I wish I was part of that, I don't know that I was. You know, like I was there in 2014 running my own nodes to participate in the user activated hard fork movement for Bitcoin. I felt like an innovator doing that, but I feel like that was already, you know, 5 years into the cycle. But either way, you can see these markets, like you can see kind of like how steep, you know, how flat that line is early. It gets very steep and then it flattens out again, you know? So like we are still in this kind of steep section of it. I think like I said, I think we would have crossed the chasm before. And then the chasm is also where you would get like as far as price action, we probably got like a big pump here. And then usually the chasm is like where the markets are dumping and the news is like, oh, this technology is dead. No one's ever gonna fuck with this. You know, it's a scam, it's a joke, like everyone involved in it is a fucking clown. And then when that like goes away and the technology doesn't actually die, which is what happened, that's when the early adoption cycle kind of kicks in. That's when it becomes the early majority. And I do believe personally that we are in the early adopters, early majority phase of these adoption cycles. If you've been here for years, you absolutely, congratulations. You were an early adopter to cryptocurrencies. If you're just getting into it now, congratulations, you're part of the early majority. You're still early. Early being a part of the names of this, so it's still, you know, it's still early days for this stuff. Just this past year, less than a year ago, the institutional money was onboarded with ETFs, with was it like there's now derivatives, you can buy options on ETFs. None of that stuff existed even 6 months ago. Well, maybe like 8 months ago. So there's still innovations to come. There's still a lot of ground to cover for this technology to become massively adopted, and this is more or less like the cycle to mass adoption of a new technology. So we're on our way. We're absolutely nowhere near mass adoption. If you go out into the real world and talk to an average person, they maybe have heard of Bitcoin as some scam thing to stay away from. Once that's, if you try to have that same conversation, once we hit the early majority to like late majority section, then you'll be able to go out, ask someone about Bitcoin, and they'll actually know what the fuck it is. We're not there yet. And like I said, people I've talked to who are in finance, so this should be on their radar. This is a finance technology. Even those people are like, oh yeah, I know about it, but I heard it was dead. Which is like, yeah, I mean, it's not. So
Thank you for the follow.
Heyo.
I'm gonna do a giveaway real quick.
Do it, and maybe I can find the thing I wanted to find for Uniswap.
We also had questions about, I think you kind of went over a little bit, but like, you have a new guess for the next bottom of Bitcoin after this bull market. Can you predict what's the new floor of what it will be lower than? And then somebody else also asked, do you think OVN will recover?
Ah, yes, I'm still in OVN as well. I actually shifted a lot heavier exposure from my pool. I just pulled out and put it all into OVN now. But yeah, I'll talk about that a little bit after we get some grubs.
Exclamation point Neon, if you want to join, we're going to give away some Woofy tokens on the Wax blockchain. I don't know that you can totally predict a floor of a token though, right? Like, you can look at resistances. You can be like,
Yeah.
this is where there's going to be heavy resistance, but like, you can always go down. 0 is the definite floor.
Yeah, there's unbreakable support at 0. I'll give them that. But generally speaking, I guess I can talk about that while we're grubbing, because usually speaking, the floor for bear markets tends to be around the previous bull market's peak. So like for this last time, right, when we hit 20K as the peak, it fell from 20K back to about the previous bull market's peak, which was around like 8 or 9 or something. We'll pull up a chart here and compare that once we're done doing the giveaway. But generally that is a decent way to kind of track it. Might even do a monthly chart for this one. Bam.
LC Hamster has a cool September thing in Twitch. September 2024. It's like a little purple guy.
Nice. Oh wait, I gotta go Bitcoin on Bitstamp so I can see the best. I want to see all of this price action.
I think after that, after those two questions, we should move on to Wax move. Or
Yeah, I agree.
we missed a week, so there'll be 2 weeks worth. And I mean, the market's gone insane.
Yeah. It's fun on the bun.
All right, the winner was ConeDog604. Congratulations, you won 1 million Wolf tokens. I think it's back over $1. So
Ayo, that's nice.
$1.02.
Let's go. For a minute between there, it was like 60 cents or less for
Got
that.
down below
million.
40, or like down to 40.
Yeah. So here, you can kind of get a sense, especially as the market matures, it gets more and more accurate to this statement where you have these bull cycles and then the bear cycle, right? And then another bull and another bear. Here's the next bull. And so you can see like the previous bull hitting like 70K, right? Right around here. Right around here, 70K. And then we pulled all the way back to like 15 or whatever. And look at what that lines up with. That's about where the previous bull cycle peak was. Similarly, that previous bull cycle also pulling back. So, we hit that 20,000. And of course, more immature, this is a wick. The 20,000 price action lasted like a day or so. In the more recent bull market, we had a chance to cash out at the peak for weeks as the market became more mature. It's not quite as volatile. But you can see even this last pullback, even with these, not quite to the like same base as before at 1,000, but definitely like it felt at about 3,000, which is right around where we kind of got that breakout before we took off, really. So like here, but that would have been close to like some places probably actually hit 2 or 3,000 at the peak back in 2013. Although it was mostly trading on Mt. Gox, and we're looking at Bitstamp here. But you can see, generally speaking, the idea is that a bear market floor should line up with or like slightly above the previous low. So same with this one, lining up with close to that. And so the next bull run, wherever that peaks out, the pullback should find support around $70,000. So I would be looking at 70. It could probably go to like 55 or so and still be like, yeah, that's within reasonable like range. But I would say kind of where we got this double top and where this price action is, not much lower than 60 for the next bear market floor. So even if we bought now and held for the next infinity, amount of time, there shouldn't be a huge drop below 60. So I would say being able to stomach 30% loss from here should cover you for infinity. But yeah, generally speaking, that is the rule of thumb in these cycles. That's also ignoring the fact that most cycle models that show these like boom and bust cycles play out over years, they only play out to the end of this boom cycle. After that, that's the end of the stock to flow model. At that point, we basically start, plateauing. At which point I would say you're expecting Bitcoin to be less and less volatile and continue to trending upwards. And then it becomes more of a, we're going to be, what are we trending against? Like, well, if the US government starts printing dollars like crazy, for sure, Bitcoin's going to shoot to the fucking moon. But how is it going to trend relative to euros or relative to gold or whatever? And in those cases, it becomes much more of a thing about hard assets. So, something like gold would probably be a better metric to trade against with Bitcoin's price if a government fiat currency such as US dollars, which isn't backed by anything except for the government itself, meaning that, if the government gets run into the fucking ground, then the money they print is worthless too. So that's not the case with Bitcoin. You can run the US government into the ground. Bitcoin isn't going to be affected by that as far as the system will still exist. There's still going to be, only 21 million total. You're still going to be able to exchange them the way you do now. And you could still do everything that gets developed from here and forward with the Bitcoin network. It's independent of shitty policy. And, especially lately, there's like talk of Elon becoming the government, was it efficiency something? I don't know, some stupid position that he wants to roll. I feel like it's because he's not a U.S. national, so he can't be the vice president. But he's trying to like buy his way into politics, it seems, and is doing it effectively. Like Trump's on board, and he has a following of people who support his dumb shit. But personally, I think his policy that he's been signaling is going to tank the US economy, like collapse hardcore. And it'll come back, but it'll be devastatingly like collapsed. And that collapse isn't necessarily going to be priced into the Bitcoin price. As far as like the US economy can collapse entirely without Bitcoin collapsing. Whereas, shares of Apple and Microsoft and Google would absolutely collapse along with the US economy. So there is a decent equities are tied to the country's currency that they're trading in, and most of the US based companies would suffer if the US dollar suffers. And the US dollar has been losing favor, especially on the global stage. Like it no longer is the only currency you use to buy oil with. It's no longer the staple of international commerce that it once was. Chinese currency is getting traction in that field. Oil-backed currencies, Russian currencies, especially currencies from non-allied countries with the United States, are gaining traction on the international stage because Russia doesn't want to deal in dollars when they're dealing on international business. And in the same way that that's happening, well, the European Union can sanction Russian currencies. So then it's like, well, then euros need to be used and blah 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 blah. Like there's a whole lot of nuance with this stuff on an international stage that just doesn't exist for these crypto assets because they're stateless. Bitcoin isn't a Russian currency. It isn't a US currency. And when, Trump says dumb shit like, I'm going to make sure Bitcoin's made in America, it just illustrates that he doesn't know what the fuck he's talking about. It doesn't mean like he's going to make Bitcoin some kind of US that's nonsense. It's nonsense. Like there is no made in whatever or some government who can do anything to stop or to boost or whatever with Bitcoin. I mean, think about how many times China has banned Bitcoin already. And most of the major Bitcoin whales are Chinese. So I mean, it doesn't fucking matter what these governments say and do, and what these world banks kind of try what the games they're playing. Yeah, it'll change the value of Bitcoin relative to those currencies, but what the fuck are those currencies worth? And at the end of the day, it comes back down to hard assets. Like how much gold can you buy with $1? Because I'll tell you right now, one Bitcoin you can buy more than a kilo of gold. Pure gold, 1 kilo. That's a fucking brick. I mean, I bought those Bitcoin for $300, and then the crazy part is back in 19, oh my God, before when the gold standard was happening, with the same $300 that I spent on my 1 Bitcoin back when I first got into this, you could have also bought a kilo of gold. What happened? Well, the dollar got devalued to shit compared to gold. How come I can now buy a kilo of gold with what used to be $300 of Bitcoin? Well, it's because Bitcoin's a hard asset. There isn't some central authority who's like, shit, we need to give more money to our business friends and make our currency more strong. So we're gonna do a stimulus package where we print 1 trillion Bitcoins and give them to everybody. No, fuck that. There's nobody who can make that decision. That doesn't fucking exist. Which is what makes Bitcoin very attractive as a hedge to global fiscal policy, at least in my book. So I'll leave it at that. But
Talk about
with
OVN.
that in mind, oh yeah, and then the other thing we wanted to look at was OVN. OVN took a massive shit. OVN was overwhelmingly, I guess also as a portion of these markets are dead. Well, there's $5.5 billion in liquidity. There's $62 billion in volume in the last month. That's not what a dead market looks like. So we're looking at here, for example, in the last day, that's almost $5 billion of volume on the Bitcoin market there. That's almost 100% of the liquidity turning over in 24 hours. That's not what a dead market looks like. So, again, people just aren't really tracking the reality of this. And this isn't some company whose word I'm trusting on these metrics. This is data pulled from the blockchain. You can verify this yourself. When the similar data gets published by a bank or by whatever, I find it honestly a little harder to believe because it's you're taking them at their word and they're reporting on themselves. And sure, there's safeguards and stuff to make sure that it's not full of shit. but this is public ledger information. Is you can't cook these books, like the books are public, whereas in the traditional finance, the books are all private, and then the projections and the like what's that called, the audits and stuff get made public usually on a quarterly basis, and generally the public information there is like weeks behind. This is real time. Like if I go and I spend $1 billion right now, those lines move up $1 billion. And unless you have your own Bloomberg terminal, you're not seeing this type of data. And if you have your own Bloomberg terminal, you're paying $100,000 a month for that kind of shit. So I guarantee you don't have that. So either way, I just wanted to point this out. But yeah, really quick looking at OVN. OVN is from Overnight Finance. OVN was their or is their governance share, but overwhelmingly it's just used for farming liquidity yields. And when the treasury is basically using the OVN, there's 1 million total of these tokens. I guess let me pull up a chart for it rather than the actual protocol. Let's do like Dex Screener. Dex Screener. We can find OVN. And let's look at the biggest pool here. 5 million in liquidity. So here we can see what's going on. We're looking at the daily chart for OVN. I have a few indicators added to this chart already. This is the Bollinger Bands and our usual SRSI. But you can see it's sold off especially aggressively, where we fell from like $40 a unit and now we're hovering about $4. That's a massive drop. That's like 90% gone. What's happened here to cause this sell-off is the way that this token is used is to farm liquidity pool rewards, specifically on Aerodrome Finance. So if we go to Aerodrome, and we can actually take a look really quick, we want to go to liquidity, and we can find the OVN pool, OVN. And there it is, OVN base volatility. You can see $4.9 million in liquidity TVL, and it's paying 130% APR. That's pretty solid. But it was paying about 2, sometimes 300% when this pool was $30 million deep, and the value of the token was about 10x what it currently is. The reason that it collapsed so aggressively is because the basically incentive system for how they pay those yields is winding down, is coming to an end. Because there's only 1 million total OVN tokens, there was a 1 year distribution schedule for how are we going to build value and distribute those tokens. And the way they were doing that is through these incentives. If you look at Aerodrome, you can see, yes, it's making this APR. This APR is paid in AERO token, not OVN. How does AERO token afford to pay this amount of APR to a $5 million pool? That happens through voting. So if we go to the voting tab here and look at that same pool, OVN, and we don't have to do that, but you can see here is OVN, and you can see it's paying 21% APR, but that's based on only the trading fees that were collected from the trading volume on those pools. Unlike normal liquidity pools like at Uniswap or maybe Alcor or Taco or wherever else you're used to, the way that Aerodrome works and Velodrome, these are some big exchanges on both Optimism, and Aerodrome is on Base Chain. And I think it's the biggest exchange by volume on Base Chain. But what happens is that all of the trading fees, they don't go directly to the liquidity providers. Instead, the liquidity provider is paid in AERO token, and the liquidity fees collected from the trading volume on those pairs is collected here, and that is then used. And this is from 1 week. This 1 week worth of trading fees is now being used to bribe to pay for people to vote for this pool. And the voting, you can see, it's collecting a little less than 1% of the total voting shares. The voting here happens every Wednesday, so you can see it just happened. And so next cycle ends in 7 days. And so now for the next 7 days, you know, it's like, well, this is, and then these fees were collected from the previous week's epoch. So these are all the fees from 2 weeks ago. And so next week we're going to get at least 23,000. But what they generally do is here you can add incentives, and so the pool or the protocol will add additional bribes or incentives to people voting for this, and those are paid directly in OVN token from the treasury. And they were doing that at a rate of like, I don't know, something like 10,000 or something tokens every week, which again, with a 1 million total supply, that's a significant amount of the crypto, like the asset of this thing being paid to people who are voting, who are basically, you know, to voters. Those voters are going to sell those to the market. And so what ended up happening was there was a decent amount of speculation about like what are we going to do, or what is the project going to do when they run out of, you know, when they hit their 1 million. All of it's distributed. And so looking at the treasury wallets, there's about 10 or 11 weeks left for them to continue to do their incentives the way they have planned. But after that, it's over. And on top of that, there is leverage trading. Extra Finance is a big example of this. There's leverage farming for these pools. So if we look at this is what's called a I guess this is a leveraged liquidity farm. So you can see the OVN pool exists here. There it is, OVN USDC. And you can see there's $1.6 million of the $4.9 million total in that pool is currently coming from here. And what that is doing is, and you can see there actually is, so if I go to farm, you can, you know, you can, there's being borrowed right now $500,000 in USDC. And if we look at OVN, 30,000 OVN are being borrowed right now to participate in this farming. So what you can do is, you know, you can bring, let's say you have $1,000 and you want to farm that. Okay, great. Well, here we go. You would be earning the 129% APR, which is what we are earning by simply participating in this pool, right? So if we look here, OVN, 129%. That's exactly what you're expecting if you just add liquidity, and all you're doing is you're adding liquidity. And this is similar to Taco Swap. You're doing it so when these pools are, say, base volatility, that just means it's 0 to infinity. So it's basically a V2 style liquidity setup. And so these pools, this pool is, you know, earning 130% APR for anyone who's participating just with liquidity exposure. And if you're participating that way, you're not really at any risk of like, there's no way to get liquidated or anything. You just like are along for the ride. But when you take your liquidity position over to Extra Finance, you take that $1,000, you're making your 120%. You can then borrow, let's say 2x, right? You can double your exposure to this by borrowing OVN tokens. OVN tokens cost 17% to borrow right now. And so you would be borrowing these at 17%, adding them to the liquidity pool, and then earning 129% on them, which would boost your actual starting, you know, on the $1,000 that you actually brought to the party here, you would now be earning 240% instead of 130. If you go even further to, let's say, 30%, and then you could even do like, you know, you could even do like 50-50, borrow half USD plus half OVN, or just borrow USD plus, which is currently 10% only to borrow. So you can actually boost your APR to 366% by doing this. But, and this is what most people were doing. But what happens now is there is a liquidation price. So you can see here, if I was to do that, the current price of OVN is what, like $5, I think we looked at? Yeah, about $5.01. So what happens then is if the price falls to $3.03, you see where this red line now is, my liquidity position no longer is able to cover the debt I have in dollars. And so what would then happen is that the protocol here my position becomes liquidated, meaning that my liquidity, which is currently paired US dollar plus and OVN, would be pulled from the pool. The OVN side of it would be sold into USD plus, and that USD plus would be paid back to pay off the debt I've taken here, which again, if I'm bringing 1,000, you can see by 3xing this, I would borrow 2,000 USD plus. So I would then use all of that OVN selling to sell back my position. And what happened is major large farming whales who participated in these insanely high APRs for months and months and months basically pulled out huge amounts of liquidity and basically dropped the price to a point where other people who were leveraged farming now became like insolvent. So those leverage positions had to be liquidated, which sold more OVN, which pushed the price down further, pulling more positions into liquidation range and cascading this effect where basically we saw the price drop 90% in the course of like 3 or 4 days because all of that price action pushing down tanked the value of the token, which dropped the value of the liquidity pool positions, which was the counterpart to the borrowed money, and therefore lower value in collateral equals borrowed money is now no longer sustainable by the collateral equals sell the collateral into the borrowed asset. And so huge sell-off cascade tanked this market down. It's not a rug pull, it's not a exploit. This is people leveraging into a token that whose main utility is yield farming. And so basically the team was like, well, that's kind of the risk of that. And they are staying the course, continuing to distribute the rest of the treasury until all of this is in circulation. Again, 1 million total across every blockchain that this exists on. And you can see, actually, look at this. In the OVN side of this pool is almost 500,000. So almost 50% of the total supply is currently liquid in the pool, the one pool on Aerodrome. That's crazy. So this is a really liquid market. It doesn't take a whole lot to kind of bring this back, especially once all the distribution ends and they no longer have that sell pressure of like, 10,000 OVN every week getting dumped. There's no more new OVN to sell off. And then the only way to sell it is to have bought it. And so at $4, I am kind of interested in this because if we look at OVN as like a, let's see if we can get this to like load. It's weird that it won't. The stats. Let's see the stats. Here we go. You can see like this is on Arbitrum alone. There's $4 million worth of liquidity in the USDT. So basically what Overnight does is it engages in delta neutral liquidity farming strategies for stable coins, and it generates revenue from that to distribute back to its flagship asset, which is USD Plus. If you look at that same thing on Base, there's $20 million doing that on Base. So if we look at like, combining all the different blockchains this exists on, there is like 20-30 million dollars or something worth of liquidity.
Higwig's asking, I feel like this is pretty much what the original question is. Once they have distributed all the tokens, what is then the benefit of having the token?
So at that point, all of these, so like, for example, looking at Arbitrum, you can see like the way that they're doing this is USDC is supplied to AAVE. There is liquid. Let's see, actually, I feel like on Base they have a more, this will be a better example of this. So like here, for example, they're adding wrapped USD Plus and USDC, right? They're farming their own asset liquidity pools, and they're like the farming yield of that, they're then redistributing out to USD Plus tokens. All of the redistribution that happens to USD Plus assets only happens to USD Plus that's sitting in wallets. So all the USD Plus that's sitting in liquidity pools, such as the $600,000 here. Let's see, there's a couple $1 million in a few of these pools. Up to $20 million. Not all of it is quite exposed to like liquidity pairing, but like millions of it is. And here you can actually see how much of it is. 7 million of it is. The other 4 million is just USDC. So $7 million of this token is participating in its own yield pools. And so when the redistribution of that yield happens, the pools themselves don't actually get the redistribution rewards. You have to have USD Plus just sitting in your wallet to earn that redistribution. And so those what would go to those pools as redistribution from the yield that they've been earning actually is then used to buy OVN token off the open market, and that OVN token is then used to bribe those pools so that the pools are paid rewards in OVN tokens, and those OVN tokens are bought with the revenues that should have been paid to those pools if they were eligible for those rewards. So then the OVN token basically becomes like the repository for the yield. So it generates yield based off of the revenue generated by the TVL of the protocol as a whole, and that TVL is, $20 million just on base. What was it? 4-ish million on Arbitrum, a little under 200,000.
That sounds a little similar to what you do with your FTW.
Yeah, exactly. It's basically what I do with my FTW token. And because I just from the start, I don't distribute additional FTW. All I do is what OVN is going to do in the future. It actually does do relatively well. It trends upwards like that as this has more revenue. And at that point, I would expect the value of this token to be around a third of the value of its TVL, because it will then generate, volume from TVL. And with the TVL being around 300 or 30-40 million dollars, I then would expect the $30-40 million, and there's 1 million total OVN tokens. Then you would expect, at a 1-to-1, that suggests a OVN price of $40. But like I said, I would expect it to be at a third of that. So, about $10 to $14 or something like that would be like a fair market value assessment based on the current TVL metrics here. Of course, as they continue to onboard different blockchains and add more, yield bearing, like here, Blast. I don't really fuck with Blast, but there's $400,000 there. And 2.9% isn't really that exciting to me. But either way, those pools, all of that stuff generates for OVN across all the different blockchains. Their next phase in their roadmap is to issue XUSD, I think, which will be a cross-chain redistributing stablecoin. So where like you're noticing here, if I go to base, if I hold USD plus on base, I'm actually making 12% just for holding it in my wallet. At the same time, holding it on Arbitrum, I'm only making 6%. At the same time, holding it on Binance Smart Chain, 6%. Blast, less than 3%. With the next phase of what they're building, they're looking to have a cross-chain distribution token so that it's the same across every chain, and all the activity on every chain feeds into that redistribution each week, or I'm sorry, each day, each 24 hours. It's overnight finance after all. But basically, that's their next step, and beyond that, they want to also create value from off-chain yields, such as buying treasury bonds and using treasury yields to make hard returns off-chain, and using those to buy back and redistribute. There's a lot of avenues for new revenue that way, and then all of that revenue shares a portion of it with basically buying back and redistributing OVN tokens. So I'm here for it. I want to see how that plays out. I've also been participating in this since day one, and I made more than double what I ever started with. I took profits as per my rule. Once I made 3x, I pulled out my principal. And so I, followed my strategies, and I did very, very well on this. But now I am still exposed. And what I've done lately is like, I participate in supplying, like
Bigly had
here.
another question, Sam. If they bribe with OVN, then won't it just keep circulating and not increase in price because you're giving out everything that's coming in?
Yeah, to an extent, yes. So yeah, part of it, yeah. But then there's also the OVN pool itself that will get bribed. And look at, like, you can see what we were looking at a second ago is how much those bribes are paid. And like for example, the current voting bribes that we saw without any incentives at all for OVN is still $23,000 a week. So that is just from trading fees from this. And then you also have, they strategically will offer incentives to pools like USD Plus and some meme coins or whatever high volatility, high volume kind of tokens, and generate more yield with stuff like that. So there's a decent amount of baseline value that gets derived, which is why I wouldn't consider it to be like, oh, the TVL could be a metric of the value. I would say it's about a third. And that actually I'm pulling from the value of a more mature protocol, which would be GMX, where you can see like gmx.io. If we look at launching this app and then actually look at the earn tabs here, or the dashboard rather, you can see that there is, $700 million in TVL on this pool. And you can see the GMX token is worth $27 with a market cap of 270 million, which is about a third of its TVL. So this is a very mature market. This is like the perpetual contract market, physically settling perpetuals market out there. Also, only currently operating on Arbitrum and Avalanche. This can definitely spread to other blockchains in the future. I hope they deploy on Base sometime soon. I know there's a community version of this that's going to be deploying on Solana. So all of that stuff adds to, the TVL metrics, which generates value for the GMX token in the same way that the volume and revenue streams for TVL built by new assets such as XUSD or off-chain revenue stuff, which would be similar to like SDAI or SFARAX, if you're familiar with those. Those are already existing option, or not options. Those, I guess those are existing stablecoin options that give you exposure to U.S. Treasury yield. So basically, like buying bonds, but on the blockchain, and at $1 at a time. So you basically are having all of those revenue streams feeding into buy pressure on OVN tokens, and then OVN tokens, that buy pressure when you buy the OVN tokens from those revenues, like you said, oh, aren't they going straight back in? Yes, they are, but they're also, the fees from those buys feed this fees, which feed the APR here. So it is like this interesting cycle of like self-sustaining, especially once there is no longer an inflation to OVN tokens. Basically, once 1 million are distributed, that's it. The only way to, sell them is to buy them. And at that point, buying them will happen on a daily basis based on revenue splits from this yield generating side of this protocol, and the selling happens on a weekly basis through the incentive programs here, which happen every 7 days on Wednesday. So even then, it's like, won't that all pull out? Even if it does, it'll still be like week-long climb back down to zero, back down to the baseline. And even if it is just that, it should stair step its way up as the fees. And besides, not 100% of the people getting paid those tokens sell them either. And so, like I said, I have reduced my exposure to the liquidity pool itself because I feel like this price for OVN is very cheap. I mean, I also bought it at the pre-sale for $20 a piece. Now they're $5. So, be aware that, they obviously took a huge hit. But if we look at what I'm doing, is I'm now taking, like, I have 450 of the OVN tokens just supplied here, letting them basically be lent out to participate in this yield farming again. And if the price of OVN now goes up, then more people borrowing those tokens increases my APY, but my base exposure remains in OVN. And then I guess the remainder of it is in Permax for actual yield farming, which I can show off too, because why not?
I think we should move on. I got shit.
Yeah, I guess. Okay, you're right. This, I can get crazy deep into this stuff. Okay, so let's do what we want to do. So we know crypto is pumping. The bull market's back on the menu. Buy the dip is absolutely a viable strategy. And Wax has finally teased us a little bit. Let's get to the daily chart here. Has finally teased us a little bit here with let's turn our lines back on, with a tap of our 4 cent floor of the market. We haven't crossed over yet, but we're getting close. What we want to see in the coming week now is going to be a pullback in Wax that forms a higher low, especially a definitive higher low. We can already see here this low close to the last low. If we're including the wicks, it is a higher low. And if we include this wick, we can actually see we've been kind of getting higher low, higher high, higher low, higher high. they're all very slightly. I want to see a more definitive one. This is a definitive higher high than, these past ones. And so what I really want to see now is like a higher low forming on the pullback. So I'm expecting for the next few days, we get that cool off, especially in line with our SRSI. So we want the RSI to, cool off a bit too. Give us a chance to kind of have more runway again. Oh, hello, kitty. But yeah, so basically, I want exposure to ETH. I'm sorry, to Wax in our Wax wallet, in our Wax markets here, and I want that exposure to be less and less counterparted with USDC. I want to be more kind of like, risk tolerant as we go up into this this next run. So let's take a look at what we have and what we can do with it. It's been a couple weeks, like Liz said, so let's see how it's gone, right? So I'm gonna log into our DeFi wallet. Thanks for being with me, guys. I'm excited by the bull market, if you can't tell, and there's a lot of stuff to be excited about when these markets do start to come and kick the doors down again. So it's really, really rewarding to have been here for so fucking long and have dredged out through the bullshit time to now finally see some light at the end of the tunnel. And especially like some of our bags are actually green, which is awesome. You can see here, this is what we have on our DeFi wallet. It looks like about $25 worth of liquidity split. We're doing Rook, LSWAX, LSWAX, and LSW. Hi, Tito. Did you get kicked out? And then we got some Wax Neon and we got some Wax HCC. Let's take a look here on the farms tab where, we're missing one of our pools, and I knew that would happen. It's because it's Wednesday, the pool got reassessed. So let's just start by doing this. Right up here, you can see it says stake all positions. There's a little orange one. That means we're missing something that we could stake. Let's click that. Okay, click that and sign the transaction. And now we are staking, and that is going to be our LSWAX LSW pool. There it is. So we got that back in. This is basically Wax exposure. We want this exposure because, like I said, we want to, this wallet, we want to bias for Wax. We think Wax, maybe it pulls back a bit this week and then comes back up. I don't want to necessarily put it into like a Wax USDC pool unless there's good APR for those. So I guess we should actually check. But last I checked, I think the APR is about to cut. Yeah, so we got 1 day left on this one, and it's about to be down to just 17%. Not attractive enough for us to ape over to it. But let's go back to all of our staked stuff. We've also earned some shit here. So for the last 2 weeks, we've been cooking on these pools. Let's take a look. We still have plenty of runway for all of them, so there's no reason based on just the runway left on these pools for us to like bail out or look for new opportunities. The only reason to do that would be because we're, thinking that there is a better opportunity or there's something better to do with it, but not because, we're running out of room. The next one is going to be the 7 days, but that's always 7 days. And then I guess our most recent one is going to be the Wax Neon pool, but we still have 50 days for that. It's more than a month. And it's cooking nicely with 76% APR paid in Woof. Great. And with, bull markets running, meme coins can have their day in the sun. I like that.
How did it get over 100 million Woof? Did somebody add more?
Who the fuck could add more?
That's, I guess, like
maybe. Or maybe it was because we added 100 million to the position that still wasn't finished. So maybe it was like the remainder of it.
That was when there was like 60 days left, or like that was when there's 90 days left. So like, how did it get back up over 100 after?
Oh, I see. Yeah. If there was an overlap, then this will show you what the total was when we first started. So if we added, if there's
that's not what's that's not what's in there now.
No, exactly. So it's paying out 1.2 million per day, and it started with 111 million. And there's 49 days left until this becomes 0, but this isn't trending down to 0. It's just going to keep showing us that was the total reward. But yeah, 76% solid. Like, I don't know, especially for a token, we want Wax exposure, and Neon doesn't really fluctuate super far from Wax. The only other real liquidity exposure Neon has is to Woof, because I made a pool paired with Woof. And I don't sell my Neon, so there's no real worry of like the Neon side of any of that stuff getting dumped. I'm happy keeping this exposure, 76% solid. And then look, these other ones are like 31, 37 again. Like this is pretty good. I mean, I still am not sure what HCC is. And let's take a look at this chart really quick. I'm gonna go over to Wax on Edge where I like to swap and take a look at our charts. HCC Hustler, it's called Hustle Token.
Like the Hustle House or something in the name of that project.
Ah, so it looks like, you know, I mean, not super exciting. It's just kind of, I had a little day in the sun. It's kind of come back down. Maybe it'll come back up. I don't know. I don't mind. This is fine. We've done pretty well with this, I think. We can take a look now at the pool too. Yeah, we have about 40 wax bilateral. Maybe we started with 50. But either way, we've been pulling pretty good APR from this. So what we should do first thing first is claim our rewards. So we're going to claim. And next, what we want to do is let's take what we've earned and either participate in a new pool that maybe is giving us high risk, high reward, because it is bull season and high risk is not the worst idea when everything is printing money. Like it's not a bad idea to ape into some high risk nonsense. So, but if we want to just stick with one of our existing pools, let's go back and see what. You know, this Rook Ellis Wax pool has been incredibly stable, I believe. Let's just double check. We'll go to Rook. There it is. Yeah. Actually, in the last few days, there's been a couple like little spikes down. But yeah, overall, pretty flat. Like I would start the trend kind of like here. So I guess we should go to the weekly chart. Yeah, pretty much here after the like last big stair step up, it's been relatively flat, which is exactly what we want as yield farmers, especially as yield farmers being paid 100% APR. So this, and with the runway here still being, you know, at least a month on the Ellis Wax side, and then 86 days, I think we should at the very least continue this for at least another week. We can start maybe divesting from this if we feel like the runway is getting too close to cutoff, so that we're not maybe like the last ones in the pool if people do start pulling out of this in mass. But even then, you know, like with just what we have in this pool, which is I guess we have to go to the pool side of this and take a look, which isn't that insane, you know, like 150, so about 300 wax worth of bilateral depth. Even with just 300 wax, we're almost 1% of the staked liquidity here. So, you know, I guess from that we could assume that the total stake liquidity there is like close to 30,000 wax. It's not that insane considering that the full diluted value or the fully like backed value here is 100, or, you know, I guess we'd have to go to pool. The full locked value in this pool is, where is that? TVL, $70,000, which amounts to, let's take a look really quick in terms of, here it is. Yeah, over 1 million wax on the wax side of things, you know? So with that being the case, I'm pretty confident that it could stand to get everyone in that liquidity pool could pull out, dump, and they would basically be dumping 30,000 LS wax into 1 million LS wax pool. We probably wouldn't even see this candle drop below where it like started down here. We got in here, so we didn't get in anywhere like way down here or anything. Would have been nice, but this, you know, was not on our radar back then. But either way, I'm not too concerned with how this is going. This is looking quite nice, especially in terms of LS wax here. I'm a little surprised to see these red things on the wax side of things when Ellis wax is looking so promising. Yeah, look at that. So this is actually trending upwards in terms of Ellis wax. I wonder, does that mean that Ellis wax is trending downwards in terms of wax? Also no. So maybe there exists arbitrage between the wax and the Ellis wax pools with Rook. Either way, very, very nice. I'm staying in here. And if nothing else, maybe we add more to this pool. But let's take a look really quick at some of the other opportunities that we currently have available over on Alcor. So I'm going to uncheck staked only. I want to just scroll down here and see, are there any really high APR numbers jumping out at us that are part of pools that, you know, we actually recognize, or that are at least high enough for us to be like, okay, sure, like we'll roll the dice for a week. So I do see like 144% here on this SDM pool again. Looks like they have done another round of wolf farming. I'm not sure when this went live, but SDM is from Dark Country, and if we look at its chart compared to Wax, it had a nice big run up and then, you know, similarly sold off. And it looks like when they re-entered then this round of rewards, you know, people are re-entering the pool again. So again, it's similar to OVN, where like it's generally acting as a pool that's more or less, the utility is to farm these pools, not necessarily people are buying SDM to do anything other than participate in yield farming, as far as I can tell. Maybe they are, but I don't know. But at the end of the day, you can see the vast majority of this volume. You see how big these candles all are. Most of the volume is happening, you know, on the way up here. Look at when we dump down here, look how low these candles got, really small. Very little amount of trading happening at these lower prices. And now that we're kind of coming back up, the volume's coming back a little bit. Hasn't really come all the way yet. That's a contender for something we might want to participate in. But at 144, it's not like crazy higher than what we are actually already getting. We're at like 110 already. So it's only like 30% more. And the Rook LSW pool has a long, like, well, it doesn't have, oh, it does. It has a longer runway and it has a more stable chart. I would rather keep aping into this one. Let's see if we find something more exciting. God. There's a God token, 135. Again, not enough of a boost. I don't even know what God is, but I'm not about to do research on something for like a 20% difference. Raccoon, I feel like I remember, is from like Collect Whale. This was something I looked into like years ago and didn't really understand then, so I doubt it's come around now. And again, it's a decent amount more, but not decent enough. Like the Rook pool, like we have the creator, like is a publicly active in these communities,
Pigwig is
is building
saying,
stuff.
is an STM got out. My thought is that it can be actively produced in their game, so people can earn that token for playing.
So that's also not like, I'm not sure if that's the case with Rook either, though. Maybe eventually it will be, but that kind of scares me off as somebody who's like looking for just a distribution side of things. Although it depends on how the token is distributed, you know, like if it's not like you can't earn it in massive quantities, there is deep liquidity here, like 1.3 billion woof and 37,000 wax on the wax side. I'm not too shaken, and 144 isn't bad, you know. Let's see what else we got. Here we go. We got 238. This is approaching a range where I'm like, I might ape into something, but I need to kind of like be aware of what it is. I don't know. Odyssey.gm. Unfamiliar. And then we're looking at this 18,000 wax. Not shallow, but not crazy deep either. Big long runway. I guess it's worth taking a look. NIMA. Let's take a look at the chart really quick. NIMA. Hello. So this chart is at least not like at the top of a huge run up in terms of wax. It's actually the opposite. It looks like it's flatlining after a big sell off. This is actually kind of interesting. This would be more or less around the like price action where I'm interested in exposing myself a little bit to this nonsense. We'll get back to that one. Let's keep that in mind. Because 238 is not bad. And again, I'm not suggesting we do anything with our existing liquidity to move into that, but maybe we take what we earned this week or these past 2 weeks in yield, and we participate in this pool with that yield instead of compounding it to one of the other pools. Looking at some of these other ones, this one just has way too many. Like I don't want to have to deal with all that. So no, pass. This one's not baseline paired with wax, which kind of scares me. Neon's a pretty solid one at 76%, but I'm biased as shit. So take that as a face value. Wax and Yeet actually seeing 200, 300%. This is quite the yield. Let's look at how the Yeet chart looks. I feel like Yeet is now being printed like crazy into yield pools, so I wouldn't be surprised to see it selling off in terms of Wax. Selling off, but honestly not that aggressively. If we're looking at the entire life cycle of Yeet, we're actually kind of at an average price for it right now. If we did want to participate in Yeet yield farming, this might not be the worst opportunity to enter here either. And at 300% APR, I'm a little titillated. Let's just look a few more of these before I call it on this side of things. LSW Yeet is a similar story. So we just looked at the Wax Yeet. We don't have to look at the LSW. It's basically the same, but we can count here 1, 2, 280, 370, 400, 430% APR. This might be a winner. That's a huge APR. And with Yeet being more or less at its average price, it's a meme token as far as we can tell. From everything that I've read about it, is the whole point of it is just to be a meme token. There is, the idea is to distribute it, over the next year through yield farming. I don't know, maybe. This one, I don't hate this. 400% is pretty solid. And then I'm not seeing going much further. PXJ USDC. This one's not bad, but we're doing about as well somewhere else. And I guess between LS Wax and LSW, Yeet, those might be our most attractive ones. So let's count. This one here is going to be 100, 230, 360, 420% APR. And then here we had, 160, 260, 70, 80, 280, 380 or 370. I think this one's the winner, LSW Wax. I guess there's one more place to look, and that's Taco Swap. Let's take a look really quick at what their new meal program pools are. I'm a little gun shy about aping into extremely high APR pools here after what happened with our exposure to dark matter, where we got rug pulled. We know that's part of the risk with these high risk pools, which is why we're not overextending ourselves into them. And so we can see here's a 300. It says it's the highest APR. We actually just calculated over 400 on Alcor, so there's really no reason to look at even what the fuck these tokens are. Although Woof and NFTV, shout out to, I think that is BuzzKing's coin. So hey, shout out, you're on the leaderboard, brah. Looks like there is a 1 month runway here paying out, and hey, and Dogzilla is second place. So kick ass, yo. That's really cool. Also, I think TD is the owner of NFTV token from NFT Gamer TV. I'm not sure if they're super active these days, but I do know that TD was behind that and is at least has been very active in the past. And that's an interesting one. If you're trying to dick around, Woof, I think, is from the Dogzilla Woof collection that is BuzzKing's collection and his coin. And I'm a fan of people making dumb shit, and he's even part of our community. So both of these pools are like relatively close to communities I participate in, and with them being close to 300% APR, I might fuck around with this in my personal wallets for fun, more as like a support the community. But right now I'm looking for the best opportunity, and I think we have a winner. It's going to be LSW Yeet. So let's take what we earned this past week and put that into the LSW Yeet pool. On top of what we actually earned in farm fees from our staked pools here, I'm also going to go to the pools tab, and on the top here I'm going to click claim all, so that I can claim all of the yield I've collected from the actual trade volume over the past 2 weeks. Done. Okay, so now what I want to do is I'm going to do 0 to infinity, so I want even parts of Yeet and even parts of LSW. So I'm going to go back over to Wax on Edge. I'm going to sign into our DeFi wallet, and I'm going to make it happen. So let's see. So first, signing into this wallet, And now I can see, oh, we actually have some Yeet tokens in here already. About 1.4 wax worth. Nice. But first things first, let's see, what do we want to move into it? So we have some LS Wax, we have some Rook, we have some Woof, we already have some Yeet, we have some LSW. Hit, Taco, I feel like we'll probably stop around. I would say anything that's worth less than like 5 cents, let's not fuck with. That's not really worth our time or our CPU resource. So we'll sell everything up to, I guess we don't really need to sell. Looking at this really broadly, we actually can just do these top 3 ones because look, we have Yeet and LSW already in even parts. See, it's both of these are 5.2 cents. So we already have the makings of the pool we want. Now we just want to swap, these two in and check it out. So we have LSW, we have about 33 cents, and we have 21 cents and 14 cents. So what I want to do is I'm going to take the LSW side of this and swap that into, I guess, Yeet, and then the other 2 tokens I'll swap into LSW. So this is going to give me the Yeet side of this liquidity. So we just swapped 8 LSW, and next I'm going to go and take our Rook, and we already have the Yeet side of the liquidity pair we want. Now we want LSW as the next side. So all of the Rook we earned from this past 2 weeks, we're going to do LSW for those. And this way, again, we're going to get some exposure to a really high yield pool. And our goal is going to be to take that yield next week and turn that back into wax until we've basically recovered the same amount of value that we've started with here. So I'm going to go also for the Woof side. And so looking at all this, we're going to get close to, I think, 7 or 8 or something. Let's see. 10. Great. 10. So this pool is going to be worth around 20 wax bilaterally. So what we're going to try to do with the rewards from this is try to pull 20 wax out of this before we even consider compounding back into itself. Hopefully Yeet doesn't rug pull us like we got rug pulled before, but we're also only exposing ourselves here with 20 wax, which is only what we've earned over the last few weeks. And I'd also like to say we started with 100 wax. We're making 20 wax in 2 weeks. That's fantastic. We're doing real well. So now what I want to do here is just double check. If we go to farms, I want to make sure I'm doing the right pool. So I need to check again which pool was it that was paying those rewards. And by that I mean what was the fee structure of the pool that actually has the rewards. So looking for it here, we got, where is it? LSW Yeet, 1%. This is what we were looking for. So the 1% pool is the one we need to participate in. So then scrolling back up, I'm going to go to pools, make a new pool. I'm going to go ahead and do LSW and Yeet. I'm going to select the 1%, which 100% have selected. So that should be our other hint that that's the correct pool. I'm going to use infinite range so that I'm not trying to play this in any way other than to farm yield. And then I'm going to try to add 100% of what we have. You can see if I do 10 wax, I don't actually have enough to cover the counterpart. So I'm going to do this side. And now I do. Adding that. And we've done it. Just like that, we have a new position. If we go to farms now and check here, there it is. And we are now earning, there we go. Look at it ticking up. 0.03 already, 0.035, 0.04. Look at that, yeeting us some tokens there. Easy farming. And again, our goal is going to be to come back here and next week, sell what we've made. And let me just do a quick calculation to see what we should be expecting. Because all these pools are separate, I'm going to have to actually add this together. So we're going to be making 55 plus 55 plus 41 plus 27 for a total of 178 per day. And we'll multiply that by 7 days. So we're looking at about 1,246. We'll call it 1,250 for simple math in a week. And so if we take a look at what should we expect that to be worth next week, 1,250, 1.4. And like I said, we're trying to get back to 20. So let's see if that'll happen. But 1.4 wax on 20 wax in a week, that's pretty solid. Let's see if it's going to be around that performance next week. We'll actually be able to tell pretty easily how much we made specifically from this pool because it's the only pool we are in that's earning Yeet tokens. So, wonderful. Yeah, with that, I think that's all we want to do this week for our positions. So what we've done is claim our rewards. We've reassessed that we want to stay in the pools that we're already in, and then we've taken the rewards and gone into something a little bit more high risk and potentially high reward. We'll see. But we don't want to get too crazy here. We do want to keep our exposure more or less aligned into wax. And for that reason, our biggest position is still the LS Wax LSW pool, which is exclusively exposure to wax. And our second biggest position is the LS Wax Rook pool, which is a pool that consists of exposure to a token that has quite a nice chart and a known creator in the space who put their own liquidity in this pool to kind of like be one of the deepest pools actually on the Wax blockchain. So for those reasons, we have a little bit more confidence behind that. We see that the liquidity exists. We see that the creator of the token puts up their own money where their mouth is too. And I'm pretty happy with that. Aside from that, we're still in the Neon Wax pool, which we're biased about here. So I won't say too much about why I like that one. And then we also are still cooking on HCC, which has been printing pretty solidly for us and still has a runway of 81 days. At over 100% APR. So we might reassess that if it starts like looking, very promising, or if we start coming up really aggressively, then we might like take some profits out of it. But right now it's kind of been trending, down after a big spike up. And I don't really want to sell on the downtrend, especially when the getting still this good and the runway is still substantial. So with all that said, I think we
running a grubfish.
We've talked too much tech. It's starting to go in one ear and out the other.
All right. Last call, exclamation point Neon. I'll run it back too. We'll do 2. Forever ago.
Nice. I'll enter the next one. I'll see if I have to add my resubscribe. Oh, I definitely do. I'm getting an ad.
All right, here we go.
Use Prime. Boom. Subscribe.
Then we'll be back tomorrow for some off the rails. Maybe we'll show off some of Max's New York pictures. I've just got some horror movie set pictures I can show off. Got some videos queued up. I went on the Facebook video. Got some good ones.
Yeah. We can talk some shit about New York bagels too.
We could show off the maybe Friday. I don't know. We could try playing the Pokemon card game too. There's some sort of like you have friends in the Pokemon card game. I don't know what that does. I don't know if you can like maybe you can trade or like battle each other, but do some Pokemon battles. We can maybe do that Friday, depending on how long.
I am into
off the rails
Pokemon
shit
trading
takes.
cards.
Be wicked.
Do you know what's the game called?
I think it's just Pokemon TCG.
Okay. I'm gonna check it out.
Probably wait to do it on streams. I can.
I mean, I want to make sure I get some packs if they're giving packs every day.
Yeah, I don't know.
Pocket.
6. All right. I'll open one more form. This will probably be our last form until we end the stream. I got a song I can play. I've been working on a new
Nice.
song for the last. Recorded most of this in my aunt and uncle's garage.
I'm in. Let's see if I got in first. Carlos. That's my old cat's name, by the way.
This also
Carlos
has
Delgado.
a Dr. Television on Voxel.
Oh, yeah, I like this. I've been hearing it out of your room, so I've had some previews.
You keep calling, I just let sorry, yeah, I know. I say it's okay, I did ask for the space. Ignoring you is brave. It's harder, but we grow. How can I be the smartest man you know? How can I be the smartest man you know? When I fuck up everything I touch with everybody that I love, I should take my own advice. I try, but it never lasts long. I love myself too little. Up till now, I've gotten it wrong. How can I be the smartest man you know? The smartest man you know.
Is that you on the solo?
That's my cousin. Jake.
Why does it feel like we're in a fight now? I told you what I needed for right now. It's not what you wanted to be like now, and that's why you're calling me in the middle of the night. Why does it feel like we're in a fight now? I told you what I needed for right now. It's not what you wanted to be like now, so that's why you're calling me in the middle of the night now. When you bite down on my bottom lip, when you taste my spit, when you told me that you wanted to have my kids, you said that it was over, but it wasn't yet. What do you call They're that? Gonna put God back on Broadway. I read it in the trades today. He got fucked up, but he said he's sorry. Only left us for a couple of days. We've been entertained in some odd ways. Our tax situation ain't changed. Why don't we bring him back on our stage? Make him wait, make him pay to pray. God can pay. Who can afford it anyway? It's all pay to play. It's all pay to play. See what I just did? It's all pay to play. Alright. I was saying something before. Oh yeah. I broke my own heart. It was my own bad. I'll get my body back. Get my career on track. They're gonna put my ass back off Broadway. Yeah, yeah. Probably more like off Broadway. Yeah, yeah. How can I be the smartest man you know? The smart. How can I be the smartest man you know? How can I be the smartest man you know? I fucked up everything I touch with everybody that I love. I should take my own advice. I try, but it never lasts long. I wanna sing so loud, fire. I wanna sing so loud.
Dope.
It just sounds like it'd be like a Sublime song or something. It's definitely a little bit of a different lane than most of my music, but Burst. Thank you for the description.
Mine never popped up.
You gotta click share in the chat on the thing after you do it. Yeah, we're about to wrap up soon. We were talking about the Pokemon trading card game, which I know you're into, Burst. We're gonna maybe get into that on stream tomorrow. I wonder if I'll just get my ass kicked though if I like start and try to battle people with a brand new deck. People have been collecting cards for at this point or days.
Mm-hmm. It's still early days, I think.
I don't know when it dropped. When did the When did Pokemon TC?
Is it still just the first 150 guys, or is it like all of the new ones that I'm not familiar with yet?
Came out on Wednesday, October 30th.
Okay, yeah, like 2 weeks ago.
People got 2 weeks of pack rips on me. I'm sure you can also pay for packs. Like, you probably get free packs every day. People that have too much money are buying a bunch of packs.
Pay to win, baby. Do I get any of my Pokemon Go progress merged over? Wishful thinking.
But unfortunately, Pokemon TCG Pocket doesn't allow players to trade cards at launch. For now, the focus appears to be on allowing players to build up their collections by opening booster packs. Trading between players will temporarily.
Ah. Well, that's fine by me. I just want to rip some packs. See what I can pull.
Play a good number of solo battles. Maybe I should start today. I don't know. Is it fun to do the starting on stream if people want to see like what it's like from launch, or should my free time and then try to share it on the stream tomorrow? Or I would start the game off stream. Okay, maybe I'll do that
Yes, that's what I'll do too.
after I do some other stuff.
Already has 130,000 reviews. 5
The number
stars.
one game in TCGs on mobile. Take that, Hearthstone.
Damn. My Hearthstone, pretty good collection, and I never paid any money on it. I just grinded out. It's
99 for an early bundle. I got a few more things I got to do. Supposed to call my buddy Ari, who was singing on that song we just played.
nice.
And I got to give like post set notes on the horror film I worked on this last weekend.
Oh yeah, that'll be fun.
The notes aren't super fun, but
Working on horror movies is fun.
yeah, it was cool. The special effects were really good. I was surprised by the quality. I also didn't realize the actor's like a guy I've heard on podcasts before, but like, have you heard of like I think he goes by John Goblicon. He has like crazy goblin makeup.
That's hilarious. I haven't heard of that, but
I've only seen him in his full goblin costume though, so I didn't know who the guy who played John Goblicon was, and the guy who plays John Goblicon was like the star of the movie I was in. It's a small world.
yeah, that's dope. I mean, the makeup and practical stuff looked awesome.
You should see John Goblicon. Like, I don't know how much makeup he does for that shit, but nuts. I was like, okay, that makes sense why this guy was like casted, because he's probably used to doing like hours of makeup every time he
Oh.
podcast. First place was Monosorte. Second place was Phone Dog. You'll get 750k. Third place was Rock Metal. You'll get 500k. Get top 5. Will get Random King is 450. Yeah, some of the better, like a lot of the horror special effects movies I've been on, I feel like have been not that great, like pretty low budget. This was also low budget, but it looked really good. It took like 3 hours to do the makeup of him when he had his like eye stabbed out, his nose chopped off.
Damn. Badass.
And then
I mean, the pictures.
they also spent a few hours doing like preparing the hand. Like it took like 3 hours to do the cast of the hand. After the cast, they had to prepare it and everything, and like one of the scenes was him chopping off his finger, so they had to like prepare the fake hand to make it look like his finger is getting chopped off. Cool stuff.
That is cool.
Nashville Lou is our last Beans. I feel like I was gonna do something and then just I feel like we should play buying the dip since
It's back on the. It's
a real thing for the
It's a
first time in a
viable
long
strategy.
time.
bull market's back, baby. Buy the dip. I'm looking for a big dip so I can buy again.
All right. Thanks for watching, everybody. Yeah, tomorrow we'll probably do some off the rails videos. I got a bunch queued up. Probably maybe do some Pokemon trading card game. So see you all then. Have a good night. Thanks for hanging. And buy the
Later.
dip.
Buying the dip. Oh man.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it. Oh my God, what's happening?
First of all of this whining by Wall Street is making me sick. 140% of GameStop was short. GameStop was short. You can't allow Wall Street to short 75% of its stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the shorts, you have to accept the fact that individual investors are playing the same game that you're playing and now you're losing.
Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it. Oh my God, what's happening? Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, push it, push it, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it. Oh my God, what's happening?
There's a lot of power in organizations online. 2 million people can get together in a subreddit. I think it's really funny that the GameStop stock is going up and just affects the market in that way. There's 20,000 people live in a Discord who are spamming rocket emojis, yelling, "Go to the moon."
Later, everybody. Have a good night. See you tomorrow.